listen, the charts are bold. Dated bands rapping stories untold. Riding with rockets through their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Riding with rockets through endless fight. Push on through the endless night. Riding with rockets, scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, tracking the charts. Midnight glory. Sanctuary in all its blending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
What's up, everybody? Good morning, man. The encoder glitched a second ago. How are you guys doing? Can y'all hear me? Make sure the audio is good. I was in the middle of the intro song. The encoder just crashed out. I turned it back on. The sound was gone. Can we hear me? Are we good? Are we good? How are you guys doing? Gosh, man, I tell you, I've I've found out how just actually impossible, and I'm saying impossible, how impossible it is some of these gambling addicted kids are to what they spend their money on, even in the light of facts, right? Oh, I felt my back so yesterday. It feels so nice. In the light of facts, right? Somebody has, let's just say, made a very interesting theory that the entirety of the prop scoring system is one that I spent 6 months of research, dev, tech, design money, hired a whole staff of people, maintain a massive overhead, hired lawyers, formed the company for the sole purpose to bring Top Step down. For money. The things people say. Is audio is lagging pretty bad? You sure? I can reset the encoder. It crashed a second ago. Are we good on the encode? Are we good? Let me listen to myself. Hold on. You sound fine to you? Oh, okay, cool. Let me listen. Let me listen. How do I sound? Hello. sounds good to me. Audio sounds good. Anyways, boy, you start posting results of Top Step score, and you bring out the wolves. People that are so, I guess, addicted to the system they're in. There's no reasoning. There's no, this is the number, this is the fact. You're just twisting the facts so that you can make more money. I feel like they've paid people to spin that narrative for so long. I feel like everybody out there that says anything negative about Top Step, they always go, well, it's because they dropped their affiliate program. Yeah, we went through tremendous lengths to do this just to go after Top Step. I swear some people can't be helped. But anywho, it's been great launching the beta of the prop scoring site. Those of you that have not had access to it yet, if you're in the Rock Scooter Discord, Rock Scooter community, you can go to our Zoom call channel, get all the link to it, go check it out yourself, play around with it. Yeah. But say Top Step is definitely better than Apex. Somebody had said, well, yeah, obviously. Well, think about it like this. No, Top Step better than Apex? Actually, it's not. Not Apex's newest program. The neat thing about it, like I said, the neat thing about the site is you can't argue with the data. You can come in here and change the parameters yourself, your win rate, your R&R ratio, and all that. And you can see how the model changes based on your stats. Top Step is ranked worse than Apex because Top Step has a less ROI potential. You get paid out less for the time you spend in market against the difficulty than you do with Apex. Apex has a slightly better payout. Top Step has a slightly better price per time in market. The data is what the data is. So I can do a comparison. I'll show you the difference between the two. Now, subjectively, you know, something could be better or worse for you. That's okay. But in the math sense of things, what it is what it is. We made the model. And let me show you. Let's do compare Apex, compare Top Step. We made the model, we put in the data, and what popped out is what popped out. Believe it or not, it is what it is. Let's put them side by side. They are both ranked in the mid tier, and it's pretty interesting how people aren't educated about what the other props can do. You can see right here is an example. And again, the display isn't displaying everything. This is just our beta. It's going to be a lot more comprehensive as to what the details are. And the AI will, once it's finished in about a week, will be able to explain why one is better with further detail. You can see that both of them rank sub 7, which is simply not that good. You can see the difference between the two. You know, essentially Top Step. This is just comparing their best ranked account to their best ranked account. It's not tit for tat. It's just best ranked to best ranked. So this would be comparing Apex intraday trailing 25 is the best value to count there. Top Step's standard 50K is the best value there. When you factor in price, activation fee, time in market, everything's accounted for. The fact that Top Step has a consistency rule. I guess this is, I don't know if this actually the display, I'm not sure if this is just for funded or eval. This might just be for eval. Is part of it, right? Like people just don't know that you have to line up everything next to each other. Yeah, the intraday can never beat end of the day. But the thing is that you lose significantly on the score when you have a consistency versus one that doesn't have one tit for tat. Yeah, and just the eval side. So this is actually, we didn't add all the, it's accounted for in the model. The model's correct, but on the display side of things, we haven't fully built this part out. Remember, we're just in our beta, so we have a whole month. The actual comparison tool is something that we're building out a lot further with a lot more detail. This is just for the beta so that you can see how this works or functionality. So we're in beta right now, right? But the list is that even on eval, the score changes because of a consistency rule. You have to have, and we account for everything, right? We account for everything. We account for the best case scenario and pricing models and all of that. Trust me when I say nothing is overlooked. You have a team of mathematical geniuses running this website. There's no way out there somebody's going to catch something that we didn't catch. Who's a 22-year-old day trading this stuff to try to make a living as a trader. We have a team of mathematicians, engineers, built this thing. So we've accounted for everything correctly, I promise. We spent months on R&D on this. So like I said, I personally don't handle the data. So I can't come in here and fudge numbers or anything like that. I don't. Independent contractors do. Independent auditors. So anyways, point I'm saying is you're going to be able to compare side by side certain things tit for tat. And whatever this is, like I said, I don't trade either of these, so I'm not really sure. The consistency, maybe that's 50% on funded or eval. Whatever the case is, Apex doesn't have it and TopStep does have it. And you can see side by side. It's going to be slightly better for certain reasons, and it's obvious for that. And you can see the different scoring metrics, like the simplicity. Apex is extremely harder. Somebody said TDD won't be better than end of the day. That's correct. The simplicity portion of the algo says that trailing drawdown is much harder than end of the day drawdown. You can see the vast score differences between the two. Just think objectively, because a lot of times people are just so stubborn on what they've believed this entire time. They have a hard time accepting reality. All right, I want you guys to vote really quick, just to make a point before I get on with the market. Do we all agree that trailing drawdown is harder than end of the day drawdown? In chat, I want a flurry of chat. We're going to get through this in 1 minute and get on with the market because I'm running late. Do we all agree the trailing drawdown is worse than is harder than end of the day drawdown? So this part of the model, can we agree, is correct? The score is worse over on Apex side, right? See, this is price per drawdown. TopStep, you can go check, go verify yourself. You get more drawdown per dollar than you do with Apex. You just do. You get more drawdown in this account per dollar you spend. You can go do this calculation yourself. Price per time in market, you get per day you spend in market, you spend less money per day in market. So for example, is for every $100 you spend, if one firm makes you trade 2 days and one firm makes you trade 1 day, then the firm that makes you trade 1 day would rank higher. You have a faster path to payout per dollar you spend. You can go do this math yourself and say the TopStep is also better. The ROI value, that uses the risk model, the failure model, and all of that, and it's a bigger part of the score. All these other factors are part of the overall score. This is one of the biggest parts, the ROI. You can actually make more money for time and market per dollar spent against the same failure rate in Apex, slightly more, which is why Apex comes out slightly ahead despite its being slightly harder. So when you look at all of it together, the model has, we can agree that, 5 is pretty low. Simplicity is pretty low. They have bad numbers relative to the same model everyone else has put in. So you could assume that the overall score between the two is going to be very low. And the model is the same for every firm. You plug in the same numbers for the same firms and get the same data. So anyways, that's how you see all of them together. And then we can compare one more. We'll add one more to the list. Let's go to I don't know why it's all zoomed in there. Oh. What the heck is going on with the site? Did I zoom in or something? Oh, here it is. Oh, I had hit control to zoom in. My bad. There we go. It's we can add one more to it, right? Let's add a firm that ranks fairly well, Lucid, right? Let's do add to compare. Let's compare all three. Why is Lucid ranked better than both of them? Right? You can see that Apex is trailing drawdown. TopStep has consistency. It's when you put them side, people just don't listen to reason. This is less than this. This is better than that. None is better than 50. We can all agree that when you have all the best criteria, you're probably going to have a better score. It just makes perfect sense. How's this site different than prop firm match? They don't do a scoring model. Nobody has a scoring model. That's just a site run by some random person that scrapes data from the internet and just republishes it to try to funnel you into an affiliate sale. They offer you no value to that, to your experience there. This scores like a credit score for the props. That's exactly what this does. It gives an overall credit worthiness score compared to tit for tat. You thought they had ratings? Yeah, that's what I'm saying. See, it's like how many people don't know what's going on in the space. I thought TopStep was good. I thought this from ratings. You guys just think so much without fact, and that's why we're here. You all prove the fact why we exist. Everyone thinks this and thinks that. Nobody knows a damn thing. Glad that we're here. Anyway, somebody said, please, can we move on? Please, can you... can you compare some fund accounts from the evaluations? In the future, you'll be able to compare them side by side, yeah. I'm sorry, can we move on? You want your trading handouts now? You want your free advice? Jesus Christ. Farina, ban that person from every contest we ever have. Don't ever let them win. Sorry, dude. Oh, they already got ahead of me on that. Would you like your free advice? Your free trading advice? Can we... All right, here. Let me give you your fucking trading handout. All right. Long a DD banned. All right. Are you ready? That's the answer. Now, since you've been permanently banned from any giveaway we can ever do, let me get back to demonstrating this. People, I tell you. Okay. No, somebody already did it. Even before I said that, Trady was like, no, Trady swung the ban hammer. I know Frida would like the glorification, be able to do it. Anyways, point I'm saying is we're really excited about what we built. This is one of the most comprehensive prop trading tools on the planet. The mathematics are correct. But people in the TopStep camp are accusing us of making a conspiracy to bring TopStep down. Like we purposefully built this, somebody said, to fudge the numbers so the TopStep is ranked lower. But like, I just wanted to kind of clarify the air there. We would all agree that, you know, certain factors, that you have affect the score, and it would make a lot of sense. Right. So anywho, Lucid, very, very, like you see how when they both have end of the day drawdown, right? You can see they both have a very much similar simplicity score. So there's no fudging of data. That's what I want to say. Simplicity, end of the day, simplicity, 9.8, 9.8, end of the day. Very similar price structure per time and market. You can see they come out with similar results. Drawdown per price, you get pretty much similar price per drawdown across the board, right? But you can see that Lucid shines a lot better because you have a better return on investment per dollar you spend for the same time than these two. So it's going to have a higher score. The overall score is a scale between 5 and 10 that ranks you according to your neighbors. So that's it. Yeah. Somebody said that's more important to most than eval having consistency. But Dead Cat, it doesn't matter what's important to you. The math is the math. And that's the point I'm saying. If you have 5 days to get to the end of this, if 2 of these days are eval and 3 of those days are consistency, then the model, if there's only consistency in one place, like funded or eval, the model just says 2 days have consistency and 3 days don't. The model doesn't care how it's split up. Every day you trade is part of a string of days. If you have to trade 1 day eval, 2 days funded, or 2 days eval, 1 day funded, it's still 3 days to pay out, no matter how you draw the box. So we account for the differences. Something that has DLL in just one side but not the other, only those days are modeled with DLL. We model every single day to pay out. So does that make sense? I know what's important to you is going to be important. That's why we allow you to search for what's important to you. But the math of what's better is the math of what's better. If one firm has 5 days to pay out, another one's 5 days to pay out, one of them, 2 of those eval days have consistency and the other one doesn't, the one that doesn't is going to be ranked slightly better. What happened to the music? My bad. Hopefully that makes sense. Well, I'm just excited about our new site that's coming out. The war starts as to which prop is the best, and nobody's going to hear it. But the answer that I got from a post I made comparing TopStep to Lucid to Apex the top step children, which again, I think they hire people to spend the same rhetoric because they say, oh, because they don't pay you, you've got a conspiracy going on. And I feel like it just is the craziest thing. I feel like they just hire people to go on social media and just say that to anyone that says anything about them. Somebody said, Matt, it's a matter of having free advice. We prefer you speak about other topics and prop firms. No, I get it. But I prefer if somebody tries to tell me what to do, then I'm going to ask them to leave my house. And they're not allowed to drink my alcohol anymore. We all have preferences too, you know. If I'm warming up the stream pre-market with whatever conversation, I could be talking about a weird spot I found on my elbow or what I ate for dinner. And someone says, can we move on and talk about the trades? I'm going to ask you to put your shoes on and leave my house. Can I hear the music now? That's also my preference, right? What if you bring the alcohol? You can stay. Isn't this a democracy? It's a metocracy. Anyways, we built this massive thing. So the craziest part about life is we built this massive free service for the public and people still aren't appreciative of it. It just goes to show, like, even when I did, you know, I went to Leaps and Bounds, you know, to get TPT to reverse their decision. Remember, we did all this research, right, from the public. You guys sent me all your information. Thank you guys for mailing me and emailing me all your stuff. I went through it. I simulated the effect. I created and recreated the problem that TPT was banning people for. And then I sent emails to TPT, talked to them all day while I'm streaming, all day, back and forth, to prove my case, to send y'all's information to them. And they reversed their decision on just about everybody out there that got banned illegitimately from their model. We were correct. TPT, the partial fills and prop data feeds in the Trade-of-8 API were triggering TPT's bot recognition software. And we discovered that. We did the work and we did that. And they even sent an email thanking us for helping them figure this out. And even so, there are people still not appreciative. There are people still talking shit about it. Nuh-uh, you didn't do that. You didn't do that. And it's like, no matter what you do with your time that no one pays you for, that's absolutely a free service to this universe, there's going to be some fucking ungrateful person anyways. And it's like, why do we keep doing this? Build a free tool for you guys. Me spend hundreds of thousands of dollars, massive overhead, paying salaries for someone to say, it sucks, it's a conspiracy. Like, you can't please everybody, I know. But man, even getting a prop firm to reverse a ban of hundreds, if not thousands of traders, there is still some idiot that has something negative to say about it. And I don't get paid to do that. I benefit nothing other than asking for the data. You guys send it. I recreated the problem and pointed it out. They were extremely grateful and open about it. I had to applaud their transparency because they actually sent everybody, here's the data of why we banned you. And that data was extremely useful because it gave us a benchmark to compare everybody against. And we found patterns in what everybody was doing. It was getting banned. Everybody was using limit orders. Everybody was using NinjaTrader or Trade-of-8. So again, that simple root cause analysis was not hard to do. Intelligence is a minority. It really is. Yeah, and so TPT was like, you know what, we figured it out. And that's exactly what's happening. So what happens is if you have a resting limit order of 50 contracts, it's simulating partial fills. So the partial fill is just hitting at it and you're getting fills at multiple accounts, different sizes at different times. And so their bot detection algorithm was just too tight on those parameters. It has no way to distinguish between the two. So hopefully they put a fix to patch that. We sent out an emergency response to you guys and we're like, everybody, FYI, don't use limit orders with TPT. We figured it out. You cannot simulate firing off millions of market orders within a millisecond of time. So we figured it out. Even with the amount of data you guys sent, I figured out the threshold at which it was applying. I reverse engineered their bot because with all the timestamps, I had a whole spreadsheet of y'all's timestamps, and I found out the minimum time that triggers. And again, I'm not going to reveal what I found out, but when I told them this, I'm sure that surprised them. Like, holy shit, this guy figured out our algorithm. I figured out how their bot detection algorithm works because they had an entire set of data from what you guys submitted to me. I had the minimum timestamp of what triggered, and I proved that time myself. I had the timestamp that doesn't trigger. Like from y'all's data. And they made it right. So anyways, even when you spend your whole night doing that, there's still someone that has something negative to say about it. Anyways, you guys, I'm glad to be part of the help. I think a lot of people for engagement like to go out there and say, I did it. I said it first. I posted it first. Like whatever. Everyone helps. Everyone does their part. It's a happy time. We got people in band. It's good. The prop cops, baby. Yeah. Well, they realized they had a tech mistake and they were very quick to admit it. And so I don't know if that's the only thing, but the thing I found was a substantial thing. There might have been other things that triggered it too, but what I found was technically correct. So, and I appreciate you guys for like changing my mind. At first, I thought that I was anti. I was like, oh, sounds like a bunch of cheaters got banned. And I took the stance of it because there weren't a bunch of cases. There was just a couple of cases and the people that did get banned. It kind of seemed suspicious. They were like accounts that never posted before. And I was like, probably so. But then one of them came to and was like having a discussion with me. No, man, it's real. It's real. Let me show you the data. And I immediately saw it and I immediately changed my mind. So for that, you know, I can actually make an initial wrong assumption too and show me the data. I'll be good with it. The prop cops are shorts, baby. All right, we're ready to go. We have sold off overnight. We are below monthly hedge pressure on the S&P. 24,262 and 6626 right here. I thought about this morning maybe longing at MHP, but I'm going to wait. We've been selling off. Market slightly irrational at the start of the day. If we fall through here, it's just going to be a sit out day. This is a possible long setup. I did not engage in it though. I made no trades last night. I accidentally found out too when I was sitting there. When actually after all this happened, I logged back into my TPT account. I was doing like essentially towards the end of the month, I go through there and I do all my numbers for like, you know, props, sales and stuff. You know, I do all my data. This is getting close to the end of the month. So I logged in. I had trade TPT since I don't know, last week or something. And I logged in and I was like, holy shit, I've got I had $40,000 of active P&L just sitting there that I could just withdraw. And so I took out 30K of it. I didn't even realize. I thought I had taken everything out. And apparently I forgot to request. I have $40,000 of profit. So I took out 30 of that. I took out a withdrawal. So I had $30,000 just basically chilling there. I've got $10,000 more of P&L because I didn't even take out the buffer. I could have taken out the buffer. But then I saw that and I was like, all right, whatever. I'll fucking YOLO it today. And then maybe in the last two accounts, and I'll make one more trade today and then either bust or just make some more money. So I was literally going in and just double checking everything. And like, you know, I was like, oh wait, I still got some active pro accounts. Oh, they made money. I guess when I woke up that morning, I'm like, I'm just not going to mess with props anymore. I completely slipped my mind. So I took 30K withdrawal last night, payout. So and I got 10K still left in buffer. So let's go. Yeah. See, like, I guess that's how little I care about posting my payouts. Like there's some people that the minute they get a $3,000 payout, that's the first, they're tweeting it all over the place. Look how good I am. Look at this. I casually forget that I made 40 grand. So. And because I also took out 50 grand a week prior. I've taken out over $100,000, more than 100,000, I think close to like 160 or something in TBT in the last month. It's a very fantastic experience. I really recommend them. It would be handy to show your overall P&L, including withdrawals for this 1 million challenge. What's your overall P&L? The overall P&L is a little bit over 500 something thousand. Yep, I can pop that up. Let's get the trading day started. It starts in 7 minutes. Like at the end of today, I'll post like the P&L report on Twitter or whatever. I got you, bud. The account currently right now is at all-time high P&L. So as of right now, this is the high. It's closer to 600. It should be closer. It should be close to 600. I'm assuming it's still in the 500s range. It's definitely not over 600 yet. If my calculations are correct, I should be close to like between 550 and 600. What's up, Nick? Good morning, guys. What's up, everybody? Sorry I woke up late today. I was up pretty late. Oh, hold on. I gotta take my medicines. Hold on, I forgot to do that. All right, so 1 bounce, 2 bounce, and rejection towards DD band usually is kind of a scary sort of way to open a market. They haven't they haven't popped up yet. They pop up when the market opens. So here, this is the overnight dynamics. This is from our Discord. So this is the manual from last night. These are last night's pivots. I still can't get over the fact that we're running a I can't get over the fact that that there's people running a conspiracy. Okay, we open in 2 minutes, guys. Welcome. Don't forget to hit the like button. Eva Trade, CBTM band has promised you make the trading world better, and there's no better place, and the boot camp is the best in the world. Thank you for doing what you're doing. Eva Trades, thank you so much. That's so sweet of you. Buying boot camps for everybody. That's super cool, man. That is so awesome. Sorry, I did not see that when you posted. Very, 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 very cool. I'm glad we got you unbanned. Like I said, I'll go to bat for this community left and right. They don't pay me to do that. I don't make any extra money. I stay up late going through data, doing models when I should be sleeping and enjoying my life and retiring early. Except I get up and stream live for you fine folks every day, and I like to make my life about y'all having a better experience. So I'm glad to do it. Very glad to do it. Can somebody maybe, we have a minute till market opens. The boot camp is a day trading boot camp. I teach you how to day trade from start to finish the way that I do it. It's $1 a class for 20 classes, and the videos are pre-recorded. You can watch them right now, or you can wait when we do them live. In April, we'll do a live sesh. Lives are slightly better, but you can watch it now and get all the info. David, so give me more information once the market opens. Nice little gap down here. All right, we are off. Cabinet meeting at 10 o'clock. Okay, yeah, that'll be something that we have to deal with too. So any kind of news in the back and forth of what's going on with the war, that's always going to create something. Let me try to buy at lower DD band, and it actually might be a loss, but we'll see. I'm just taking the gamble here at the dip. I could be wrong here, though. Wait for liquidity maps to pop out. Like I said, I'm just taking a small bet, and if I'm wrong, I'll be wrong small, and I'll cut out quick. All right. Alrighty. Let's see if we get when the maps pop up. Resilience is slightly positive on NASDAQ, which is good. Let's see. We're on the BRSU upward side of MHP, so a dip to MHP is likely possible as well. That is going to be 60 points away. So if I fall down to 48, I'm only down 10K in the hole. That's not that big of a deal. S&P, pretty much worse kind of boat. MHP resistance, this is bearish down in here. The only thing I can hope for is maybe a DD band bounce. I'm probably on the wrong side of the trade here. So we're gonna wait. So basically, I'm gonna hold for some drawdown, maybe 10K in the hole. I'm gonna stop if we lose MHP. I've got a trade here. I've got a bigger trade here. From here, we either pop up and go to there. I'm gonna close out with negative res. If res is positive, I'm gonna hold it to there and then close out and short it. If we dip, which is likely the case, I might add to it here up to close to 10 and trade it to there. It's not looking so good though. Opening below or closing, starting the day below DD band is also a very, very, very not so bullish thing. Especially when the ratio is less than half. I'm not longing it with a big fat position just yet. This goes to here and then it likely sells on from there. Pretty simple setup. Yeah, it's probably going to dive a little bit more. So that's okay. So I just get my position size kind of small. Let's keep it closer to, yeah, just 6 is fine. We don't have really anything good coming from here. Where did my resilience go over here? Okay. So my goal is I'll take maybe 10 or 15K of drawdown max and then pull a plug if I'm wrong, just to buy the dip on this. And like I said, I'll hold through it to let it kind of play around in here. I mean, if we lose this, then we just crash out today. To open and to continue selling, that's kind of one of the things that's a little scary. Let's scroll through where the monthly maps are really quick and double check. We found out that some of the delays with the monthly maps had to do with the historic hedge pressures that we were publishing because it was starting to bog down the server computers and they were starting to get like processor overload. So the bear zone on the longer term. So yeah, this is all looking pretty bearish today, guys. So if anything, my hope is that I get a nice little blast up to those bear resistances to continue to short down. And other than that, we just open and completely fall. And that also happens too. And then I just get out of the way quick. Okay. So we have greater market bearish. We're below bear zone on both S&P and NASDAQ. DD ratio bearish or below MHP. All three signs are bearish yet again. So I'm bearish today, at least from half gap. At best case scenario, we pop and go to there, then I can short off of that. It's totally fine. Nvidia looks good and bullish, though. That's kind of nice to see. Meta, it's a bear liquidity map. Apple's in liquidity pockets. Apple and Nvidia both don't look too bearish. They both look okay. Microsoft, blah. ABGO. Again, this can just dump to there. So 24084 is kind of like the better little target there that we could probably get some interaction from, which that's why I kept it at 6. Maybe I can keep it closer to 5. Let's keep it closer to 5 and I'll smack it with 15, I promise. I get lower to the bottom. So today's plan, not bullish, right? So the question is, do I just jump in and short at the bottom? You can. I don't like to do that. I still like to bet on the choppy nature of bearish-ish markets. This falls to there clearly, and then bounces from here and then goes to there. It's going to be stuck between here. Best case scenario is it tries to pop in there and then gets slammed back down. So the best short would be up here. Look at this cluster pivot right here, like all in here. Dude, I'll short the farm up in here. If we get that, dude, I'm firing off shorts like crazy. All right. DD ratio is hidden. Oh, my bad. All right, let's see what we get out of this. I still got to trade those. I still have those. Let me check my payout here really quick. Get back to here. Dude, TPT is kind of slow at processing there. Maybe they've been busy, right? Hold on. I'm just waiting for it to hook down in here, and that's what I'm going to do in a second. So, right down here, let's see what we got. MHP res is still negative. Just hanging on to this. And if we lose this, then it just dies and I just get out of the way. It's worth the stab because the opportunity is there. I mean, it's at least 200 points of move to the pop side. But we can come out with some news in a little bit. Use it. I had 6, I trimmed down to 5. It's just a bet here and here. Now you can see the confluence says both of these things are resistance, right? So inside of here, it's a weaker confluence, so I have a weaker position. Simple as that. Now we just wait. Wait, you can't hear the music? You guys can't hear music? No, you can bring it in. Yo, that's so weird. That's so weird. I hear the music. Oh, let me try this really quick. Hold on. Thanks, babe. Oh, that's so weird. Here we go. How about now? Yeah, so earlier today, like something happened. My sound input like flip-flopped to something else. So that's what happened. My bad. Huh? Yeah, I know. We got, yeah, so that's pretty cool. I want to take a picture of the super chat. That's really awesome. Really glad to help. So glad to get you Eva, to your, you know, to the resolution you were hoping for. That's really good. What I forgot about my monitor? Wait. Y'all can hear the music now, can't you? That's on. Wait, my monitor. Wait. Remind me, what happened? I'm so like lack of sleep. What monitor? What? Tell me. What did I say about a monitor? You can hear me. You guys. I gotta stop trolling me. Y'all can hear me. Shut up. I know you can hear me. Wait, what did I say about a monitor yesterday? My brain is completely melted right now. My screen data was lagging. Good question. Not really sure. Let me brag for a minute while I'm waiting for my log to take off. Let me show you guys something cool. A brand. Oh, I can put it right here. This is, look, besides the video card, look at this. Every cable is plugged into this thing. The new form factor hides the cables completely. This motherboard is fully plugged in with all the cables. Look at that. Look at that cable management. I'm so turned on right now. This is the sexiest thing I've ever seen in my whole life. Oh, they have like, it's all done on the back. All the connections are on the back. Dude, look how clean it looks. And I got a little LCD screen for the top as well. It's gonna be a little bit of a screen there. Anyways. Clean. Clean. How clean is that? The BTF modification on the ATX boards has connections on the back. The cables plug in the back. It is called so look for anything that says BTF on it. That's the Hero 870. The ROG 870E Hero. I'll give you the link for it. Ooh, that breakfast smells good. Oh, there goes my trade. Let's see. Like, resilience is slightly positive on the S&P. All right, let's not risk it. Let's wait. It's slightly positive. That's a nice little bump. Let me wait for here to short. This bad boy. I closed out. Like I said, anytime I know that I'm probably wrong and I get lucky like that, I'm going to close out. It could go up to my short area and I'm going to take it. It's this bad boy right here. This bad boy, but you look for this and you look for it to say this on the side of it. Because normally, and I'm just going to geek out for a minute, normally your fan headers are here, your ATX and power is here, your USB and all your audio is all down in here, right? They throw this on the back of these newer, so the BTF version of this, back to front or whatever. These cables are on the back, so you don't see any cables after 30 years of building, 35 years of building PCs in my entire life. The thing that I've hated the most is having to wiggle cables through a case and that 90-degree bend of that inch-thick 24-pin cable to get it right in the side right there. Used to, you'd have to do a full 180 bend just to get that thing and then bend it over and then push it in. Hear it snap. And your fingers are sore for a week because you're raw trying to get that in there. This, right in the back. Can't even see it. I haven't built a computer since it came out, so I'm kind of excited. Yeah, that's what she said, baby. Dude, so cool. And so anyways, y'all can rewind the stream and look at it. You can't see a single cable. The only cable is the 6x2 power cable for the graphics card. That's it. It's the only cable. Now, probably close a little early. Resilience is not necessarily super positive, so this is that sort of short-ish target area up in here. And I'm going to not jump in too early, but this is where too short from, all things being equal. I did make a modest 3,200 bucks. I will be attempting a short from here to trade it all the way back down to there. I got, like I said, the move took off kind of, you know, from 66 to 19. That's a 130 point move, which, okay, I'll take it. My entry was actually right here though, so I didn't get a lot on that, and I didn't add to it there. So I got what I got, and then I'm okay with it. But I'm gonna wait. Higher short from higher. They're having talks about talks. Can I zoom out really quick? Need a screenshot and mark the levels in your chart, please. You know you can buy the platform. Support developers' hard work. Anything else? Would you like me to stand up and twirl in a circle for you? Would you like to stand in my bathroom while I shave? Anything else? Anything else I can do for you? Let me know. Zoom. You want me to cook you breakfast while we're at it? Come out. I've got food in the fridge. Just come on over. I'm just messing with you. All right, you got it. Stealing it is funnier. This is true. Yeah. Stealing it definitely is funnier. It's the cheapest $100 you'll ever spend. You should do a YouTube video for that company, Matt. Wait, for which company? Don't see me twirling. All right, fine. Fine. Anything else you guys want me to do? I don't get paid enough for this. Oh my God. Is that, am I ballerina enough for you? And whip your P&L out? All right. It's right there on the desk. Flop it out for you. Dance for me, boy. I don't get paid enough for this. Ooh, I've got matcha tea. I like it when she makes me tostadas, man. That's like my favorite. You guys know me, my favorite breakfast is always like Mexican style breakfast, the tostadas. Really nice. I'm like, give me the chilaquiles. You know what I mean? Give me something with the beans and the tostadas and the tortillas. That's always, every time we go somewhere out, that's all, like people get eggs Benedict. No, I get the tostada with the beans, with the egg, with the avocado. Oh, so good. All right, so I think that the upside move potential goes to here. With negative MHP resilience, we've got resistance, that's all it. Now, with resilience going greater than 0, it is possible that we can get a gap fill beyond here, but it is now going to be a fight on here. It's a really tight trade. Again, it's risky like the other one. It can't overshoot, but below here, there to there is the play with positive rise, right? So you can get this like upside down V shape, opportunistic bears from here to here. The S&P, same setup. It's funnier to steal it. Y'all crack me up. Okay, this is bear zone top on monthly maps. This is hedge pressure, monthly hedge pressure, resistance, 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 all cluster on S&P. Let's start building. I'll put 10 here, I'll put 20 here. Oh yeah, dude, chilaquiles, that's the way to go, man. Every time I go to some place with brunch, I'm always like, what's the thing that's got the beans and the salsa and the avocado and the, you know, the tostadas, tortillas? Give it to me. Whatever it is, man, it's the flavors of that, just like amazing. Why did I go long? I longed out the door because of DD ban. This is always a long setup every time for the most part. Didn't have the confluence, so I only longed it small. I currently just flipped at half gap short on S&P, even though this is slightly positive and this is positive. Not the strongest short either. It's a B short, but this is a medium position to get in early here and to finalize the bet there. We've got monthly hedge, dynamic monthly hedge. We got bear zone top on monthly maps, hedge pressure, monthly hedge pressure, bear zone top on the liquidity maps. We have a cluster of like 1, 2, 3, 4, 5, 6 bearish pivots all right here with the confluence on the 2 gray ones being bearish. Now, If it breaks this, it is a rocket ship to the upside. All of this pressure being broken would absolutely be a freaking rocket ship. I'm telling you. Can I please check this fund VCX? What do you mean? On the charts? No. I'm trading futures, man. In the middle of the heated trade, I can't pop something up. I don't know if we have a liquidity map for it. Are there options for it? Yeah, we got nothing for it. I looked at it. We don't have options for that thing to do the calculation. Sorry about that. Bust out the Ibanez. Want to see the skills? You want to see me shred? Matcha's your go-to in the morning? Oh, I love matcha, man. It's so good. In Mexico, never ask if the food is spicy. They're mild. It's not mild. No, it's not. Negative arb is bullish. Negative arb is not bullish. Negative arb is bearish, but not necessarily bearish unless it's a big enough arbitrage. Just 12 points in the Nasdaq, about 3 points in the S&P is not like really bearish, mildly bearish. Some Iran news on financial juice. Yeah, so like I said, my finger is on the button to close this out in case some weird Trump tweet comes out that the war is over or whatever. Iran seeks guarantees the war will not be repeated. Yeah, so right now they're negotiating, and I don't know if maybe today or tomorrow they come out with that thing. They want international recognition of being the sole owner of the Strait of Hormuz, and that's never gonna fly. It's terms of their surrender. Yeah, we'll stop the war, but you have to recognize us as the controller of this. No. They want to make it a toll lane. Yeah, no. They're never gonna go for that. So it's gonna be a little bit more negotiating, probably at least a couple more days. I feel safe shorting now. I don't think the US is gonna budge on that, and it gives them a whole other day of debating, which is good. Maybe my short will play out pretty well. Wait till the weekend to settle. Oh, dude, 100%. Like, what we're gonna do is on Friday at the end of the day, I'm just gonna long 5 contracts, and I don't care if I blow up the account, but I'm gonna long 5 contracts and then just wake up Sunday night with the 300-point gap in the Nasdaq. Easy as that. It's 5 contracts. I can absorb the drawdown. I'm just kidding. I know. You can make your fiance get her to make you chilaquiles for breakfast. Let's go. So good. So good. How can you not? How can this not be like your favorite breakfast in the history of breakfast? I mean, look how good this. Maybe it's just the Texan in me. Look at how good that is. Like it's like your cotija cheese, you know, tomatillo sauce. Oh my God, lime, egg. Oh, this is I can't give investment advice. I can certainly give you breakfast advice. This is really good stuff. How tasty. Tasty. You don't send 10K Marines, you just let them have their way. No, sir, you don't. Sounds like Homer Simpson. Oh, 64 slices of American cheese. Oh, 64. 63. And then the clock goes around. 2. 1. That's my favorite Homer bits. In the middle of the night. Woo! 64 slices. Let's get them all. Knock them all down. You're intermittent fasting? Oh, my bad, dude, for messing up your fast. I apologize for that, my friend. So sorry about that. I wanted to see a little bit more reversiness here. Are we anything? Yeah, you can see my position, top of the screen. I shorted. Ba-da-dun-dun-dun. I'm so good at this. Ooh. Got my free 15 points there. Resilience is still positive. Let me take that. Take what I can get. I don't want to hold for any further than that. Resilience did not go negative on the sell-off. That's a good time to close out of that 11,000 profit today. Remember, you got to be quick. There's no evidence that it sells. I was hoping for res to go negative. It got slightly more positive. It's probably going to bounce. Let's chill for a minute. In and out. 2 for 2 today. Hold on, let me eat my breakfast. So I hear about your intermittent fast. I'm about to so piss you off, dude. I know. Look at this. Oh. Oh wait, it's missing the hot sauce. Oh no, I'm out of hot sauce. That's okay. That's all right. In and out. Resilience in and support the trade. Smart decision. Not going to short it again. Not yet. Yeah, DD ratio is now at 50 as well. Not the strongest short. Wow, I have now shifted my mindset. If it breaks through here, I'm willing to jump in on the long for the rest of the day. Not quick. I'm not going to chase it quick, but if it develops along through here and on this liquidity pocket, conditions are starting to change, you guys. I'm going to wait though. I'm not going to take it. I'm going to wait just in case conditions change. I'm happy with what I've done so far. Shorting is definitely faster. Yeah, definitely a faster trade. Let's wait for something better. I mean, I can't complain. That's a decent 2 scalps back to back. I did get tricked up, so I think that was smart that I closed when I did. When this was down ticking and this was up ticking to 0 and this went positive and didn't go more negative, I closed out. You guys know the drill. That's Bootcamp 101 stuff. You see how I switched my mindset very quickly? I bought the dip, I was gonna average in here too. I had 6, closed down to 5, held through it, was gonna smash it with 15, didn't get that. Got to here, didn't like it because the indicators were not so good yet. So right when we popped here, I ended up closing out, flipping to the short, getting into the short, and then the bull side kept going and I got out of the way of the short. This is perfection in execution. Watching my data and knowing the situation I'm in as quick as possible, making good decisions. That decision right there was a very strong one. That was a $7,000 decision. Very quick. Sometimes you got to be quick. That's why when I tell you guys, you're like, can you zoom out on the charts? Can I steal your data for free? And I'm busy. I'm going to miss shit, right? So, yeah, I have to focus. I get those decisions got to be made quick. This platform update pivots automatically. Yes, pivots are automated and to update, as well as the confluence designation support resistance is updated automatically. The calculation is done at 9:30 and it doesn't update throughout the day because it doesn't need to. The hedge pressures pretty much are stagnant for the most part of the day. Even though you have options also trading, they technically should change a little bit. We actually found historically through our testing that they don't change within a degree of your actionability. They're going to move very slightly. So we just, instead of having it update in real time all the time, we just have it update a little bit. Sorry, update once a day because that's when it's fully guaranteed. David, $20. Interested in getting the information you can about the boot camp? Hey, brother, thanks for donating boot camps for other people. Let me tell you more about it. Okay, now that we have some time that we're going to chill. So the boot camp, let me show you guys what it is. You know, we're a data-driven, math-based community. I'm an engineer turned trader. And so I've been trading since 2010. I've been trading full-time since 2015. And I've developed an entire method and process of my trading. You guys have watched me trade. I hate, you know, a lot of people are like, when they try to sell you an idea, I'm not trying to sell you an idea, right? So I just like to show you the stats and the numbers. You guys have seen me trading live. You've seen me do this million challenge thing. You might have seen me do the random challenge thing where I let ChatGPT choose a random time and I just go in there and trade it. And just all I can control is my position size and I still didn't lose money. When you watch me do those challenges, it's to demonstrate principles I teach in the bootcamp. Why do I teach this bootcamp? I have this love of teaching, despite what I think most people that teach or sell something are just trying to supplement their income. I teach a bootcamp that I don't make $1 off of. The $20 you guys pay goes straight in employee salaries. We have a huge overhead to manage Rocket Scooter, and that's just, that little bit helps to pay everybody else's stuff here. I don't net profit from it. So why do I do it? I love it. I love teaching people something that I made, that I invented, that I built, that I'm very passionate about. It makes me happy to see somebody come to me and say, you know, this was the missing piece. Your risk management technique was what was missing. Or I didn't have risk management until I went to the boot camp, and thank you for that. These are the things that make me happier than sitting here in my underwear, staring at a screen in a dark room, throwing millions of dollars in the air and like letting it fall down in my face. This is the most boring part of my life, was becoming successful as a trader. So you guys aren't there yet. It probably is still exciting to you. It was exciting to me too when I wasn't there yet. And then when I got there, my next thought was, okay, what's next? This is a very risky way to make money. What else can I do in life? Then I started angel investing, and I'm part of an investment group. We invest in shit all over town. We buy stuff, we build stuff. And so it's like, once you get there, it's immediately old, right? So what made me happiest was, as I had a community of quantitative nerds just like myself. All of you guys are like, he's not talking about me. I'm fucking talking about you, every single one of you, nerds. My team of nerds, we hang out every morning, and I'm with people that I love hanging out with, smart people I love talking to. It's so invigorating to be in this environment around people that are like myself while I trade. Made trading fun again. Sharing what I know and having people also share what they know through our findings and help us develop it even further is even more exciting, because I feel like we're doing, you know, like think tank level stuff, right? It's really cool. So anyways, I'm not a nerd. I play World of Warcraft. It's okay, bro. World of Warcraft, whatever. Matt quickly deletes his Frost Mage from existence. Don't make me sheepy, bro. All right, so let me talk about what we built, right? Rocket Scooter is a brand new method. It's named after engineering background, but basically there's a whole story that goes into where the name came from. But let me give you something that's helpful. I'm a person that likes to stand on business, and I like to say, you know, you can see my stats, you watch me trade, you see my P&L. I trade only with Rocket Scooter, right? And the people here in chat have left reviews on the website. You're definitely welcome to read them. rocket.play/Matt. And you can go read the reviews of everybody that has taken the boot camp. If you've taken the boot camp, please come leave a review. Good or bad, I don't care. Leave an honest review. Tell us we suck. Tell us we're good. Whatever. But you can come in here and leave reviews. Like, you can just see what people have said about it. I tend to trust what other people say rather than what somebody else is saying because, you know, but everybody in chat has their own opinion about, you know, life, and this is basically what we've said. It's completely changed my trading for the better. Now, again, these results don't guarantee your results. I don't think this is a part of the pitch. But go read the honest, you know, commentary from other people. The overall functionality of Rocket Pro Plus is top notch. Somebody said I've been using for years. Commonly say this one stands out like no other. Can generate slates. The only tool that has worked for me personally. From Mattman. It's a unique and effective way to trade the markets. I know volume is king for years, but haven't found a way to capitalize until now. So we teach the process. The volume is king. Most comprehensive trading education out there. Yeah, it's $1 a class. I'm sure for the value, it's infinite value for a buck. Yeah, like no other price-based action TA. We don't use price-based TA. Nothing. It's completely different. Somebody says the only service I found that only has somebody that can explain the markets and the many moving parts, interacts with it, but also provides data that's useful. There's a key component of this, data. Now, with our boot camp, what I created a long time ago for myself was a way to figure out a couple things, right? Number one is what's consistent in the market. Number two is how can I exploit it? What I found out was that price action is random, so we start on that philosophy. Price action completely random. You can't predict it left or right. But what you can do is you can predict where volume is going to be with 100% accuracy. I'm talking 100%. Every one of these pivots that are on my screen is a guaranteed high volume pivot. I have been on a journey to find every single thing I can to produce predictable high volume pivots. Can you see on my chart so far, everybody? Check. Where I've drawn these boxes, do you see high volume spikes at the lines on the chart? So far, so good. And you were here at 9:30. These were drawn automatically on the chart, right? This is a very key component of where we're going with this. Price action is random, but volume is king. You get it so far? Right? You can't argue with the volume spike at half gap and a volume spike at today's open, right? So I went on this journey, right? Because to me, the strongest thing that I ever found in trading was where volume was. When you can find where volume can be, then it brings up one key component of trading, which is called trading efficiency, entry efficiency. Efficiency is your ability to be right or wrong from the right place. Let me explain the right place. I didn't short here. I didn't short here. I didn't short here. I shorted here and you guys saw it. The fact that I shorted here and went to there was worth $8,000. Had I just chased a short here, I would have been upside down and barely made a buck or two, right? So the answer is volume. Volume is extremely important. If I can identify where I need to act from, let's forget long or short. If I can choose where to act from, then I am right from the right place, but more importantly, I'm wrong from the right place. I invalidate a trade much more quickly. This is a cluster of pivots. You've got 1, 2, 3 pivots sitting right on top of each other. And let's pretend that our confluences were all resistance. It's a mix right now, so it's not necessarily super bearish. They're kind of all different confluences. So pretend that they all said resistance and I wanted to short. And I waited, and I waited, and I waited, and I waited, and I hit the short. I know that I'm invalidated because 3 things that are resistance broke, and I can very quickly escape the trade. Does this simple explanation explain a whole lot so far? Before I go forward, explaining it further. What's up, MK? What's up, man? Chartin and Chartin. So far, so good, right, Dave? Does that make sense? When you can identify where you're wrong with the quickest certainty, you have the smallest loss. When you are right from the right place, you have a higher probability of having a better R&R on your trade. But when you're wrong from the right place, you were always wrong small. Because you are certain that you are wrong. Somebody shorting right here doesn't know if they're right or wrong yet, because it can still go to there and then turn around. They can lose money, stop out, and then eventually be right. So when you're right from the wrong place, you're always going to be wrong. If I'm right from the wrong place, which means, let me just long right here. It looks like it's going up, dude. And then you've been upside down ever since. And this is the wrong place to long from. Where's the right place to long from? On your high volume pivots like you saw me today. I was long from the right place. I had an entry of 5 here, and I was willing to go 15 here when it dipped. I didn't get the 15, but I got the 5. I was right from the right place. And if I was wrong, I would just be wrong small. Okay. So the goal became, how many things can I exploit that has predictable high volume every single time? Easiest thing to understand, the gap. Open, yesterday's close, always are going to be high volume pivots, no matter what. Every time you touch the open and close, this is equivalent open and close from QQQ converted to NASDAQ futures. And you cannot argue that here is high volume spike and here is high volume spike. Again, predicting volume is what we're known for. This is why what we do, people have called a game changer. And don't take my word for it, right? I competed last year in 2 trading competitions and got first place. ETFs and Pat Whelan's tournament. I won that tournament, first place. This entire community got second place in Tradeify's Grand Cup, which was team against team. We trade against every influencer out there. Brian, Max, even TJR had a team. Nutty Bar, all these kids, they all fell off. They all blew up. Rips won, we got second place. We were neck and neck in the top 3 the entire time. We never stepped out of the top 3 because our team is good. Our method is good. We crush the ICT communities out there. Anyways, that being aside, what we teach is very good for position management, risk management, and entry efficiency is a huge part of profitability. Here is high volume, here is high volume, right? So these pivots are where I'm going to act. It doesn't matter what I pick long or short at this point. It just is where I act on the market. That's all that matters. An example is if we break this and go here, I'm not going to continue to fire shorts up here in no man's land. I'm going to hit the next pivot to short from place to place. So far, without knowing anything further, this sounds pretty basic, right? But does it, at least everybody is asking, does it make sense? So far, so good. You just got some chilaquiles, dude. I'm telling you, man. I've spoiled all of your fasting. I know. Is everybody here, chat, does it make sense so far? Knowing where to trade from allows you to create a risk to reward plan, allows you to know where to stop, how much you're going to make every single part of the trade. This morning, right, when I got in the trade, I said, you know what, if I'm wrong, I'm going to be down a little bit over 10,000 and I'm cool with that. I knew exactly where I would be wrong at and how much I would lose. All of that. It's all on the top of my head. It's never, I'm going to long and cross my fingers up, I win. Every moment I'm in a trade, I know how much is at risk, how much I'm going to lose, and all of that. Oops, I think YouTube just crashed. Hold on. Let me reopen YouTube. I was wondering why y'all weren't chatting. Are y'all charting and charting? Hold on. I thought y'all all stepped away to go to the bathroom for a minute. We're back. All right. But it brings me to my key, and we have all these songs that people wrote here that we play on the stream. Wrong from the right place. Red or green sauce? Gotta go with the green, man. Tomatillo sauce, the way to go. That's my favorite though, but that's just me though, because I love sour stuff, dude. I love tomatillo sauce. The next boot camp is probably gonna start in April. So I should open businesses in Dallas. It grows faster than Houston and is safer. That's probably true. But Dallas is also kind of boring. It's mostly suburbs, and I kind of like the danger and the excitement. It keeps me alive. But Dallas is nice. That's not a bad city. Do I short that pivot for support if it breaks above it? Yeah, so let's go through a couple more like layers to this, right? But so far this makes sense, right? Okay. So knowing where to trade from makes a whole lot of sense. Now, each one of these are a completely different thing. They all do different stuff. This green line is based on CME span, which does margin requirements. We turn margin requirements into actionable pivots. This green line is 100% a high volume pivot, no matter what. Exactly a high volume pivot. As a matter of fact, it's a high volume pivot that only 8% of days close below that pivot. And 92% of days close above that lower pivot. Sorry, 92. Look how sharp that pivot was. It's one of our best pivots we have. I created this technique from margin requirements when I reverse engineered CME span back in 2016. I created the risk interval process out of that. And then about 4 or 5 years ago, we created these bands out of that. So you can't argue with it being a high volume pivot and a predictable pivot and an accurate pivot. Everybody see this on the screen? Like I said, we literally have hacked the market. We have found something that is 100%. Believe that? Tall order, but I'll let you guys throw wrenches at me to prove me wrong. Would you like to throw a random stock? Tell me a random stock. On the fly. In midair, in the public with camera on me. Somebody throw me a random stock. I will show you what 100% looks like. Somebody says something. All right. Somebody says XOM. Oh, cool. Okay, let's say ExxonMobil. That's what you guys say in chat. Now, if we have liquidity maps for it, there will be something. Now, there is nothing for Exxon. Unfortunately, no calculation was done. Let me try something we might have. Microsoft. Okay, let's look at Microsoft. Okay. So each one of these pivots are going to be high volume when you get to them. Okay. Bull zone bottom, bear zone top. You see volumes in decline, you get a bull zone bottom pivot, you get a bear zone top pivot. You get a bull zone bottom second pivot. Can't argue with that. Okay, give me another one. AMD. Okay. AMD. I'm seeing what you guys are saying in chat. I'm just picking some random ones y'all are throwing in chat. Let it load up for a second here. My platform has frozen. Let's F5 this one. One more time. Where the... Oh, here we go. AMD, like I said, 100%. Nobody's stuff works 100% of the time except for ours. All right, throw me another one. So confident in this. 100% is 100% mRNA. Okay. Every one of our pivots will be where volume is in the market. Now, we don't buy the full New York Stock Exchange data. We buy reference data. So fortunately, you're not going to see all the orders in here. Fortunately, MRA is a bad example because we don't have a lot of... The volume clearly isn't showing. See how wiry it is? So kind of... If I was to bring up the NYSE, let me load this in Thinkorswim, where we do have 100% of the data. So we don't trade stocks here, so we don't buy 100% of the data. Let's look at the volume at mRNA. The levels were 54, which is here. 54 is bear zone top, and you can see 54 exactly here, bear zone top, the highest volume of the day. 100%. Let's go. I'll do a couple more. I'll do it until you guys tell me I'm convinced and I can move forward. I can do this all day, but tell me when you're convinced. 100% means 100%. Let me know when you want me to move forward. It never doesn't work. Half gap, volume spike. Open close, volume spike. I'll keep going. 100% means 100%. Nvidia, that's an easy one. It's never wrong. Never wrong. Never wrong. 100% is 100%. Edge pressure, volume spike. 100%. Let's go. We convinced? Everybody? 100%. Crazy, right? So what is it we do? All right, let's talk about it. Res is dropping, but still positive. How do we do this, right? 100% is 100%. How do we find where the volume is? A bunch of techniques together. Let me explain what liquidity maps are. This is one of our main bread and butters, this little thing right here. What we do is we can extract where volume will be from options. It's that simple. When I learned how Black-Scholes worked, my very first thought was, oh my God, I can predict volume with this equation. Black-Scholes is an equation that prices options. That's it. And in that equation, if you can see the math, you know what you can get out of it. I was completely blown away by the fact that I've never seen software out there that takes the options math and extracts where dealer positions are and shows you where hedging will be. The volume around the board here has everything to do with hedging. Let me explain one part of this part. So open, close, and half gap are based on the MOC. You will have high volume at the open and high volume at the close because submitted orders to market makers. This is just a normal procedure. You can Google MOC order and it will explain what these white lines are. There's a very easy explanation when there's high volume at the open and close. Your biggest volume spike is at the open and close. Very large buffering of order flow. So if I were to move this part and talk about what's left, we try to do everything we can to figure out where we can find volume, because it just allows me to map out the day to find a good place to trade from. Matt's in boot camp mode. Dude, I'm 100% ready for it. All right, so let me introduce you to hedging. This is NVIDIA, and say that you're a trader here, and you wanted to long NVIDIA 1 million shares, okay? You want to buy 1 million shares. There's not 1 million shares on the ask. There's nobody selling you 1 million shares, but you fat finger longed 1 million shares. So as you traded, a market maker, a bank, is on the other side of your 1 million shares. We understand this so far. It's hard for me to go further if people don't tell me they understand this. Anybody understand what a market maker is? It's not the secret guy trying to sweep your stops. Don't listen to what they say about that. Market maker is a bank whose job is to supply liquidity. If you're buying and there's not a seller, they're the seller. They get paid to be the seller, right? Just a bank in the middle. So when you long and nobody's on the other side, they're going to short to you until a seller steps in. They're going to hold that risk on their books, right? So so when you put a big fat finger order, they're going to be short and they need to find sellers. So they're going to raise the price because that's how you attract sellers. That's why when a big long raises the price, that's exactly what happens. Makes sense. When people are long in the market, price goes up. Dealers are short looking for sellers to offset the buyers. They're always trying to balance the market. So if a dealer is short 1 million, they're not just going to hold upside down forever in a bull market. They're going to hedge with something. In this example, we say they're going to buy calls to go with it. Just for this example, calls. They'll buy a number of calls. We'll just put calls with the Greek letter delta after it. They're going to buy some kind of hedged position to balance this out. They're short NVIDIA, but they're also long NVIDIA at the same time. You can have a certain amount of calls to balance out that risk you have at all times, and the amount of shares you have or calls you have, you can sort of tweak in real time to always keep that risk close to zero. How many calls do you buy? Well, the full amount would be 1 million divided by 100, right? Which would be 10,000. But they're going to also not just buy the full lot. They're going to buy based on the Greeks, which is the risk of that option going in the money, which they may buy 5,000 or 4,000 of the max 10,000 they need to hedge neutral. But the thing is that they're always going to have some kind of countering position because plus minus equals 0. We call it neutral. So does this process make sense too? You're buying, the bank's shorting against you, and they're like, I'm going to buy some calls just to make sure I'm neutral, right? They're neutral, no risk. And the reason they do that is because they actually get paid a portion of the fee that you pay the exchange when you're trading. So when you pay the exchange your commission, the exchange gives pennies of that to these market makers every single time they fill an order. They get a couple pennies. As long as they can just make free money by trading and balancing, trading and balancing, trading and balancing, they're always neutral risk. They're just raking in free money by just being the other side of the trade. So the point becomes that we now know that if you buy here, then a dealer's got calls and a position there as well. And so enter a third player for this example, market maker of the option, is the person that sold those calls to this guy. I mean, every buyer has a seller, right? In this particular instance, you bought 1 million shares of NVIDIA. JP Morgan shorted to you and bought some calls from Deutsche Bank that sold them the calls, right? So now you have a market maker of the stock engaged in a trade against the market maker of the option. And do you see how this is a chain that can go on and on and on and on and on forever as everybody is getting in a trade, balancing the risk, getting in a trade, balancing the risk, getting their trade over and 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 over, blah, 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 again, right? It can go on forever. It's called a hedging loop. A hedging loop can go many chains before it circles back to the original trader, or many chains before you actually find the seller for that buyer. That's what the whole chain is trying to do after all. Every person engages in risk until the end of the chain when you finally found somebody that sold 1 million shares, thus completing the chain. Until then, your risk is passed around from bank to bank to bank to bank to bank. Got it? Okay. Where do you learn about all these interconnections and chains of market makers? Reading a lot of stuff and knowing a lot of people in the industry. This is base knowledge. There's not anything special, I'm telling you. This is just how Wall Street works. Pretty basic stuff. And so, yeah, the biggest market makers are not the actual banks, right? There's all citadels and all the stuff out there, correct. But the idea is there's somebody always taking risk in the middle. And this is the easiest way to explain it. So the idea is the hedging loop can go infinitely long. But in this particular example, you bought 1 million, dealer shorted you, bought some calls, market maker of the options sold some calls, and now they have risk. So you have risk and they have risk. The ends of the chains are the only traders with risk and everyone in the middle is balanced. Okay. So on the end here, how do they balance their risk? Well, if the calls they sold go in the money, then they're going to have to long the shares in the money. And if the calls go out of the money, they're going to short the shares or dump the shares. They're going to sell the shares. So as long as in this loop, there's a buyer of the shares and now you have a seller of the shares, there's a way that this loop can close in on itself is that if the options this guy bought or hedged are out of the money, then this guy is selling shares into the original buyer. And it turns that loop into a triangle. It's the very easiest one to understand. So let's say that the balancing act was such that price is at exactly the right place and right time, such that this person has sold as much risk as you've bought, and now the loop is closed. Okay. With that being said, you've got two different trades to pay attention to. You have the original trader against the market maker of the stock, the trader that longed, and that's what a bull zone is. It's where this interaction takes place most than traders who are shorting the market also against the house. So bear zone is when there's more of those trades shorting against a market maker just of the stock, and bull zone is where there's more longs than shorts. It's where the bulls are divided by the bears trading against the house. As you may have noticed, the middle is where the house is balanced themselves. The people that are longing up here are losing down here. People who are shorting down here are losing up here. The market makers are winning against both trades in the middle. That's why this is called a liquidity pocket. Where the longs and the shorts are at closest proximity, this is the most liquid spot on the map. Dealers are winning from both sides of the trade without considering the hedge. So far, so good? Okay. Now, so a bull zone, how we find dealer options, we have a whole array of computers on the server side of this platform that read options data in real time, and we look for evidence of those hedging loops. We look for the 1 million shares bought and the 10,000 calls bought, and we tie them together and draw the loop. We look at futures, options, and equities all together simultaneously. And we take the entire options data feed that exists from Opera, we roll it up, and we take that data and we remove non-hedged options that don't perceive to be belong loops, pure speculative options, the ends of the chains. We remove the ends of the chains, and we only leave anything that's part of the middle. And when you do that, you can divide a stock, a future, anything into the bull and the bear zone. And with 100% accuracy, there will be volume at that interface every single time. Because of that strong polarity of where that long pressure is versus that short pressure. These edges are defended very heavily by market makers who are winning in the middle. The defense of that and the hedging that takes place there creates volume at that edge. Did I explain this easily enough for everybody to understand? There's a very complex mathematics that go to this, which I'm skipping over. But at least the understanding of why there's volume there makes sense to you guys. So far, so good. The complex mathematics is called the Black-Scholes equation. And if you'd like to go through the math, it's all in here. Now, when I saw the math, my first thought was, I can predict volume with this equation. And I freaked out. I was like, I gotta get to the drawing board. And we did, right? And so what's my background? I'm a mathematician, by the way. Despite the goofy performance on stream and the antics and whatever, I'm a mathematician. I grew up as a mathematician. I taught myself coding when I was 12 years old. I can code in like 15 to 20 languages. I never went to school for it. I went to school for chemical engineering, and I did that for a little bit. But I've always been a mathematician. I hate the word savant or prodigy or whatever. When I was a kid, they called me that. I took the SAT when I was 12. I'm a weird, goofy math kid. I've always been that way. So math is my thing. And I always have been everything I make is very sophisticated mathematically, which is so crazy when I create this prop scoring model that, the top step kids are like, no, I know better. It's like, whatever. Mathematics is my thing. I'm fucking nerd. I know. Point I'm saying is that the idea is I can learn where if I can dictate like, anything, like for instance, if I can pull from that information where dealers will be, because I know they're going to be hedging, then I can find the volume of that hedging. That's exactly what these bear zone and bull zone are. So back to the original example, that original triangle, but a bear zone and a bull zone just means this is where the tipping point is. There's definitely more bulls than bears against the house. And down here, there's more bears than bulls against the house. A very important thing to know about the market. NVIDIA today, bear zone. Not surprised that we're not rallying to the moon on NASDAQ, right? Some of the biggest stocks are trapped in a bear zone. If NVIDIA were to rally, it would get resistance from that buffering right there. So say that I went into long NVIDIA at this high volume pivot that we are at right now. My R&R would say the best I can want to bet for is that, because it's very rare that it just somehow turns bullish without news. Typically, about 90% of the time, the stock will close in the same zone it opens in. That's another stat that we found. It makes a lot of sense, right? All of Wall Street is like positioned up right here. So it's going to take a significant event to change all of Wall Street's minds. And we found out that's about 10% of days that happens. 90% of days, a stock will stay in the same zone it opened in. So because of that, I tell myself, well, NVIDIA has about a trade from there, and then maybe I trade it back down to the next pivot. Look at that. With bare basic information, how's rock scooter different than unusual whales? Well, unusual whales, on the main site where they explain gamma to you, they explain gamma is the acceleration of delta, which immediately would show you that unusual whales is an AI slop fest that doesn't even know what the fuck they're talking about. And like the first paragraph, and then the Google site, you just search it on Google. Gamma is the acceleration of delta. You immediately, if you subscribe to that service, you have no idea how bad that sounds. As gamma is the velocity of delta, and it's not the acceleration of delta. Now, to a mathematician, that's not interchangeable and mostly cringe to say. And I heard that, So I actually made a post about that, and it kind of blew up. It's like, no. Acceleration is acceleration. It's a second derivative. Acceleration doesn't mean goes faster. It go make delta go faster. That's a mathematician, boys. You gotta say that right. Trump's talking. Let's be careful, guys, with Trump talking. Anywho. All right, so let me get back to the hedging. I'll finish the story here. So you have more bulls than bears against the house. More bears than bulls against the house. Yeah. The house is here. Market maker of the stock is here. So the other side of that equation is the options that they have are sold by options dealers, and they have exposure. The maximum gamma exposure of that third point of the triangle, the people that sold the option, their maximum gamma exposure of dealer-only options are here. Hedge pressure is weeklies, monthly hedge pressure is monthlies. They're separated out because monthlies is a bigger bite of the market. It's a lot more risk build up in the monthlies. So the option sellers have risk at hedge pressure. Maximum gamma. Gamma is the acceleration of price change of the option. It's the second partial derivative of price of the option with respect to the underlying, holding everything else constant like time, etc. That is actually acceleration of price, these del 2 price. So it's not acceleration of price. Gamma is the acceleration of price, not acceleration of delta. Delta is the first partial derivative price. But I digress. Let's put the math aside. That shit gets boring to you guys that don't like that stuff. That gets me hard though. Oh, it does. Oh, that math is so hot. Back to this. Maximum gamma means maximum change in delta. Change in delta means maximum hedging of that third part of the triangle to balance their books out. So gamma is a fancy word for max volume. It's really what it means. If you boil it down, gamma is just max volume of hedging. The higher the gamma, the more shares you need to buy at that moment in price to balance your books out. So when you pass through a highest gamma spot, like if price were to just move straight through this, volume would move like this in a bell curve, which is the gamma chart per price just turned on its side. You will see the acceleration of delta hedging because of the acceleration of price change is proportional to the acceleration of order flow. So i.e. maximum gamma is just maximum order flow due to hedging. This is when I saw the Black-Scholes equation, I was like, I can use gamma to find volume pivots. That's exactly what I said. And I went to the drawing board and did it. It looks like Trump is saying stuff. Let's frame up a short. Hold on. Let me go back to here. Let's see what we got. Hold up. Hold up. Oh, I don't want to miss out on this. For the most part, we're shooting down our range drones. Can we just like maybe just short this? I don't even know. Maybe I missed out on it. Let's just not do anything. Let's let Trump just talk. I think the downplay is in though. Iran is begging to make a deal, not me. Look at that. You know, whatever. I could have jumped on the short. Let's just let it be doing its thing. But anyways, so bull zone, bear zone, and hedge pressure are all parts of the same triangle. Anybody short that? You'll short that thing? Yeah, I don't like trading these headlines. I'm okay making 11 G's. I'm chill. I did want to chase that short though. Yeah, I could have, would have, should have. Listen, the headlines, it can go either direction. Don't be stupid, you guys. Don't be smart. So does everybody understand that how this works so far with the explanation? It might have gone over some of your heads. It's all right. Don't even worry about it. You don't ever have to understand a lick of options to understand what it is we do. All you have to understand is there's a reason that this is there, that's there, and this is there. This is guarded volume where bulls and bears are against the house. This is where the house has options against the dealer. And those options dealers will guard that area with maximum order flow to balance their books. It's called gamma hedging or gamma exposure or whatever. We're kind of pioneers of the gamma exposure field. The difference between us and unusual whales and everyone else is they don't have the hedging loops. We invented that whole way of doing that. We extract just the dealer portion from the options because we find the hedging loop. They just look at the open interest and multiply it by the gamma. I can teach you how to build everything in unusual whales in under 30 seconds. Literally. I can build it in 30 seconds. Cut and paste the open interest from Thinkorswim, multiply the open interest by the gamma, build a histogram chart out of that data, and you will get what people call gamma exposure. It's just this noisy little shitty thing. It's not important, but maximum gamma exposure is the pure gamma flip of just dealer options because you know it will be hedged. How do you know that we have that answer right? Because 100% of the time, there's a volume spike in hedge pressure. Every time. Every time, without fail, which means that's exactly the moment that matters. Here's another stock called Amazon. The minute you pass through the maximum gamma exposure of dealers, there's a volume spike. Like I said, the fact that my math is correct at extracting dealer options, I'm the only person in the world that has that in a trading platform for you guys to access. That data feed does not exist. There's no data feed that says this is market maker position. We built our own data feed to be able to do that. when you guys are loading up liquidity maps and it sometimes takes 5 or 10 seconds to load up, our servers are congested. They're crunching mountains of data. But the idea that everybody here that's kind of smart at options will know, yeah, maths definitely makes sense because you would understand that gamma is maximum order flow to hedging, right? So therefore, if you can identify maximum gamma, then you can identify maximum order flow, i.e. maximum volume. So does that make sense, right? How do you know the math is right? Because every time you pass through hedge pressure, there's a bell curve of increased volume because that's where that maximum gamma is. This is volume capitulation of shares from short to long to short the other way. And then you get that setup there. Man, I was like wanting to chase the short though. You know what I mean? I don't know. Maybe there's a long opportunity here. I don't even care about these headlines. Do I just want to like buy DD ratio with a 44 DD band, a DD band with 44 DD ratio? This is a long entry spot. Double dog, dare me. There you dare me. 0.44, it's not that bad. Wait for MHP. That's the smarter thing. How about one? How about just one? Whatever, I'm gonna scalp with one. Let's just call it one. It's not strong enough, but as you see, where there's a high volume at open, high volume at DD band right here, these are volume pivots. If I'm wrong, I'm only wrong small, 40 points the other side, I'm out. One E-mini contract, let's do it. If I hit MHP, I'll snap it harder. Same trade I made this morning, why not? Anyways, back to the explanation. So that's liquidity maps in a nutshell. We learned that, you know, the hedging is amplified at these levels. So you're going to have this resistance this way, the more longing than shorting on the hedging, and the resistance this way. We call this gamma negative and gamma positive. We coin these terms to mean positive means more longing than shorting on the hedging side. Negative means more shorting than longing. So as you approach hedge pressure, it creates like this sort of like pressure that pushes up. That's why we call it that. And I always like jokingly draw like a fan on my chart. The guys here call it whoosh fan. It's just like this magic sort of like, you know, push that repels those levels. It's the hedging of the dealers. And you'll see that as you get close. Like watch right here. I know that I can be wrong at least, you know, what is it, 60 points? And so 60 points in one contract, not that big of a deal. 24,048. I'm down $1,000. I'm down 10% of what I made with the one contract here. At the other hedge pressure, which is a very strong volume pivot, I'll hit it with like 9 or 10. You know, something small and hold through the chop, something big. I already know I'm down 10% of this gain. If I lose, that's fine. If I add to this and take a stop there, I'll lose probably like a third of this, maybe close to half of this, and that's it. We see I can use the volume pivots to really frame out a trade. If I'm wrong small. Trading small, because this isn't like news headlines, right? But the fact that I'm not seeing stocks like Amazon or Nvidia like shit the bed on that. Oh wait, never mind. Nvidia did shit the bed on that. Another thing that happens when you participate in what's called a gamma flip, which is where you flip on the other side of hedge pressure. Does everybody see this one effect here? Do you notice how it speeds up into growing volume? Does everybody see that? This is part 2 of a gamma flip. The interaction point right here is high volume nonetheless. But when you flip from positive gamma to negative gamma, do you see that curvature? That is your acceleration of hedging. The platform for us is 60 points, destroys your prop account. Not if you trade micros. You can set whatever stop you want, like when you trade, but make sure your position size is big enough or small enough that you don't trigger, you know, breakpoints on whatever stop you choose. Everybody see the curvature, right? You see how per minute it's curving faster and faster and faster with growing volume. This is what margin calls actually look like, or forced liquidation from like stop losses. Pure acceleration to the downside with growing volume is squeezing more. When you flip the gamma, that pressure flips the other way, becomes twice as strong, and can start squeezing a bunch of stops. So another key effect is that when you break through hedge pressure, the market becomes irrational and chaotic and gets squeezed all the time, which is why when we lose monthly hedge pressure, I'm not longing anywhere because this shit can accelerate and crash, right? So we utilize that as an avoidance technique. Everything I'm teaching you is just to show you there's something behind the scenes of what we're doing. So here I'm going to long 1, here I'll long 9 more, here I'll stop, and I won't long anywhere else for the rest of the morning, right? Because I don't want to be long as that growing volume in the middle of a crash. But I'll buy on the edge of this just because headlines are flipping the news around. And Trump is talking, so you know, anything can happen. If I'm flipping a coin and gambling on some good news, might as well flip with a dollar rather than 10, right? Something small. And so point I'm saying is that because we know these pressures, we can now create a roadmap that shows the pressure. Example with NVIDIA, you can see that bear zone top is resistance, edge pressure is rejection from both sides. This is support. When you sort of map all this out, you sort of get this is that right here. This is that right there. You can now map out possible flow paths with all things being equal without news, which direction things might go if the hedging were just to take over. Here's an example, Google. Google's got high volume pivot hedge pressure and a bear zone in the same place. That's double resistance in one spot. You can see that this little setup right here shows me that if we open and it goes up to orange, we can trade it right back down to open. The setup for Google is a possible trade from there to that pivot, and that's it. So if I were to short Google, 290 is a great place to short it right back down to the open. It's really hard to break through that bear zone buffering and that monthly hedge pressure shorting. And so because of that, we found out that we can use options to not only create high volume pivots, but we can use the flow from those options to predict which direction it's going to go. One step further. And to add to that, one final piece of the puzzle is, how do I know if hedge pressure is going to break or not? There's some probabilities. Under normal confluence, about 74% of days reject this orange line and only 26% of days break to the other side. Somebody said, tell me about the boot camp. Yeah, well, the boot camp is data driven. And in the boot camp, we give you documents and independent back tests from our own users that show this information there. 69 and 4 is 73, not 74. Our users publish data that actually show you the probabilities of these things. Hedge pressure holds 70% of the time, monthly holds 73% of the time. 73% of the time, it's a rejection. Full confluence, it's closer to 90. What's full confluence? Well, if the index like the S&P is hitting monthly hedge pressure, then we go and look at every single one of the stocks at the same time and make an indicator out of that. This is the net sum of the market cap weighted of every stock also, and their exposed gamma exposure. If that orange line down here is less than 0, then the majority of the market cap is also gamma negative of the stocks inside of the basket. The internals are also negative gamma. So when the index gets close to hedge pressure and you're choosing between 73 and 27%, when you have the confluence, it becomes 90 and 10. 90%. How far was this back tested? All the way till 2020. These stats are bear market stats, worst case scenario. This was modeled, and we present this to you in the bootcamp. You get all this stuff. This was modeling the market crash during the tariffs. We wanted to see what the worst case scenario was because we hadn't seen a crash since COVID. We finally got one, and we wanted to see just the crash data. And even when the market was crashing, it was 73%. So that's the worst side of the coin. Spot back tests that we've done over the years with perfect conditions, it's closer to 80 to 90%. So the range at which this works is 74 to 90%. So this is, we want to see just the isolated crash data. So this is the low end of the range, and this is published by one of our members. When I say like we're a data-driven community, we're a community of nerds. And we give you math, we give you data, we give you everything that goes with it. We give you technical papers. And of course, in the bootcamp, it's a bunch of videos. There's 20 videos that goes over all these principles and processes, how to predict volume and how to position around it. Now that's just showing you where the pivots are and what to do. The real like sort of magic of the bootcamp is the position sizing. Why am I in 1 right now instead of 10? these confluence indicators we built are designed to tell me the risk I'm in. It's a very, 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 very low probability that we bounce here. This is close to the 74% again. It's definitely not 90. The confluence is most of the stocks have also broken hedge pressure. The likelihood of it bouncing really strong is very low. Because of that, this says resistance rather than support. So when we get there, I'm still going to long on the 74%, but I'm only going to long small because I lack the confluence. Does this make sense, everybody? Like when you think about it, it's very basic how it all works out. I know where volume will be, and when I get there, I'm using the stocks to break the tie. Stocks are negative. I'm still going to take the probable bet, but I'm going to trade smaller because I don't have the full confluence. If this orange line was positive, I'd be hit that with like 20 contracts, right? Yeah, it'd be interesting to see the December data with the choppiness. I have the assumption that since December, it's been close to like those crash-like conditions, more on the low end of the spectrum, right? So because I know the likelihood of failure is really high, my position size is just really small. Look at that small loss I've taken. Now I can add a little bit to this, just a little bit. Let's add 4 instead of 10. Normally I would do with NASDAQ, I'd hit it with 20 with the confluence. Without the confluence, I'll hit it with 4. It's still a decent bet, but because everything says resistance, where am I gonna get out of the trade? Pretty good probability that at least bounces here, but to where? Probably to that next resistance, and I'm going to close out. So automatically in my head, I know that I've got 65 points that I can possibly make with the 40-point stop. I'm going to take a 40-point stop. So now this is a 1.5 to 1 setup with 4 contracts. If I stop 40 points below here and I lose all the way down to 40.20, I only lose 4,000 bucks, which is what I told you guys I was going to do earlier. I said I'll probably lose about a third of this. Now I'm down at 4,000 bucks. Even before I enter the trade, I know how much I'm going to lose. And now I wait. I could hit it with 30 contracts, sure, right? But I don't have the confluence to go with it. Hey, 100% of the time, this is a volume spike. Congratulations, Matt wasn't lying to you. If I'm wrong, I'm only wrong small. If I'm right pretty big. So this entire lesson of how liquidity maps works, does that help you guys understand what it is I do? Shouldn't be a surprise that I win trading contests. I have a mathematical approach to the stock market. And look at this. When I hit that resistance, I'm just going to close out and take the profit. Watch this. First one out. 2,000 bucks. I'll be back. Could I have traded bigger? Sure. Am I missing out on the trade? Yeah, not really. First one in, first one out, right? And I tend to have most of my trades like that. If I'm wrong, my calculation, I knew exactly how much I'd be wrong on. Again, that's just a demonstration. I probably could hold for a little longer. I just wanted to, like, you know, mic drop there. Fun, right? Anyways, I've turned trading into a science more so than just, you know, most people are just gambling. And it's so underneath things, it's where can I trade from, the efficient pivots. Here's the volume here. S&P hit the open. Look, there's volume here, same setup, right? And so the indicators will actually flag these words to say support and resistance so that you can know on the fly. And this updates in real time and it tells you why. For example, this says it's resistance because that yellow line is less than 0. This one says it's resistance because this green number is less than half. And this is the same thing. This is a percent of market cap of stocks in bull zone versus bear zone. Same thing I told you earlier, right? We're looking at NVIDIA. NVIDIA is in a bear zone. We take the net fraction of how much market cap is bullish divided by the total of bull plus bear. And you can see that right now the stock market is tilted towards bear side. So the confluence is that if the stocks are mostly bearish, then why would the index go bullish? Well, that's a great assumption to make, right? Which is why earlier in the morning, you saw me wanting to short from here. Because why would we jump into bull zone and index when the stocks are in bear zone mostly? Why would we break hedge pressure when most of the stocks are also gamma negative? You had a cluster of all of this resistance here, and it made perfect sense why it turned around this way. Rocket Scooter team, how many people shorted from the cluster pivot at 66.23? Curious how many people took that obvious short today. It's in the class. Right? Unlock from MHP. Freaking slipped a strat. Look at you guys. All right, so here's what it is, right? Our boot camp is not about handing out things. Our boot camp is not about giving you call outs. Our boot camp is not about bullshit technical analysis. Our boot camp is very logical, very driven, and it's very simple to understand. I just explained one of the most complex differential equations on the planet to you guys using hand gestures, right? You guys in some kind of a gang. Kind of neat that now you guys will be experts in how gamma hedging works and delta hedging works, and understand that we can turn options data into usable futures pivots, and every single thing in the index has a confluence with the stocks. That's what they all do. This white line here has the stocks at their own white line. If the stocks open themselves, you can see that the majority of the stocks actually are trying to fill their gaps. Therefore, there is some kind of support pressure here, which is why it's actually sort of trying to hang. But you can see that while stocks are wanting to fill the gap and index wants to go up, the index's own hedging wants to pull it down. So you've got competing supports against competing resistance, and it should be no surprise to you that the market is stuck between those levels, right? It's like we've got trading down to pretty much a science. Now, news and one-off things can completely break structure. You can get so much random shit that happens that the market just plows through everything, but it's rare that that happens. It's less rare when Donald Trump is president, I'll tell you, but when Biden was president, my win rate was through the roof. But structure can break with random news, so you can be careful, which is why I'm in and out. I'm not really taking full runs on trades, because any moment somebody can say something and this market's gonna fly. We're in a weird environment now that I know that those structure breaks are very severe, and we're one tweet away from a structure break just going in opposite crazy directions, right? So everybody here, if it's your first day here, y'all are explaining about like what the boot camp is all about, is with these principles. Number one is we teach you trend identification and volume pivots, like I just taught you here. That's one part of the boot camp. Number two is we teach you position and risk management, the most important thing. Position sizing. When you saw me get in a trade, I said I'm gonna get into 1, I'm gonna get into 4. If I lose, I'm down about 1/3 of the account. If I win, it's about a 1.5 to 1. Before I even put money on the table, that's all up here. I promise you, if you think that sounds lame and boring, stupid bro, I'm just gonna fucking buy the orb, I'm gonna buy this. Trust me, do what you think you must. But the guy on the other side of your trade, the one that's winning when you're losing, he's doing what I'm doing. The science of risk management is the secret to making money as a trader, dude. It's not picking the direction. I'm going to tell you, I pick the stock market direction wrong most of the time. But the way I maneuver out of wrong trades is a science. The way I maneuver in right trades is a science. I am very knowledgeable of the risk I'm taking at all times. If you're not, the guy that's beating you will be. So the third thing we teach you is market avoidance strategies. An example is that when I showed you with NVIDIA earlier, right? NVIDIA broke through hedge pressure and created this sort of accelerating effect with growing volume. You see how normally volume is normally in decline after the open, but then somehow you break through hedge pressure. Now there's all this activity. You're squeezing out all kinds of people and it gets a little chaotic. So what we tell people is that when you do have a gamma flip, for instance here, the market falls down to here, it's kind of irrational. Volume is sporadic and choppy. we don't trade when markets are irrational. Sit out. Let Wall Street figure this crap out. Don't engage in this. You have 100% certainty that you're accelerating to the downside and becoming more volatile. This is Chop City. If you're trying to buy the dip on Nvidia, you can have all kind of crazy stuff happen. So market avoidance is knowing when you're in those low probability zones and just staying out. If NASDAQ were to break MHP and keep falling, the same thing. You'll watch it today. Like, example, if we break through, I'm going to draw for you. Pretend that we do this and we do this and we do this and we do this and then we do that. Your volume will look just like this. Like that. Edge break, it'll accelerate faster, volume will grow, and it gets crazy. We avoid the market fully, 100% on MHP breaks below DD band. We just don't trade it. Stay out of the way. The words here, this says support because this white line is greater than 0. We're going to do a bootcamp giveaway in a second, by the way. We had a super chat this morning from a couple people. David pitched in 20 bucks, interested in getting the information when you can about the bootcamp. So David donated 20 bucks. Let me ask you a question, David. Were you trying to buy the bootcamp or were you donating $20 to the community? Because we have a thing here where we donate boot camps and buy them. People here buy boot camps for each other. Were you buying that for a stranger or was that for yourself? And I think that, over my live thing here. We had 175 euros. To dollars. It's $200 donation. Oh my God, that's crazy. Thank you so much. Okay. So the $200 donation, I'm going to match your donation of 200 bucks. And I'm going to donate $600 to the community as well. So I'm going to donate 600 for a total of $800 we're going to give away today. I'm going to buy boot camps. So thank you so much, Eva. Really appreciate the donation. And then your 20 that you put in, I'll match that with 60. Brother. All right, dude. Thank you for your donation. All right. So I'll match your donation as well. Your 20, I'll match with 60. And that will be $80. So I'm going to give $880 away worth of boot camps. Which means I'm giving away 44 free boot camps. Fantastic. Let me tell you something. The boot camp is mostly paid forward. And that's the craziest part of this community. We're going to be doing boot camp 14. We've done it 13 times already. 20-day process. We train you on risk management, position management, R&R, finding high volume pivots. It's a very simple process. Where are your pivots? What's your confluence? What's your position size? I go through the technicals underneath the hood because it's a novel approach that nobody's ever heard of before. But volume prediction gets rid of everything. There's no time frames. Doesn't matter what time frame you're on, the candles, the volume's the same. Doesn't matter what the candles look like. No chart patterns, no shapes, no historic trades, no 1 minute, 5 minute, 10 minute, hour chart, none of that. No technicals whatsoever. Where are the pivots? What's the confluence? How big do I trade? And every part of your trade you're cognizant about at any given time. So for the longest time, people were donating boot camps because like somebody would ask about it like you did, and somebody would say, hey, let me just buy it for you. And people donate 20 bucks to the stream. And let me buy his boot camp. He's got to do it. It's great. And as time went by, more people started donating for more people. When people would ask about it, somebody in chat would be like, hey, I got a payout. I'll pay you 20 bucks. I love it. Take it. It's great. It's $1 a class. And the reason it's so cheap is because I don't want to sell. I want to sell a trading course. You guys are students trying to learn trading. I'm not going to sell it for thousands to 2,000 bucks. It's $1 a class. The principle of that is it's $1. It's enough to pay the salaries of some people that manage it, and that's it. I make $0 selling courses, and I can effectively say that. Although I do have overhead in the company, so I don't want to run negative overhead, the cost of a boot camp, but it is at cost for me. I don't profit from this endeavor because I love doing it. As you see, I gave a huge lesson out. I love that I'm beating the market and I can teach people how to do it. It's exciting to share this information. I just have fun doing it. So this is something that we do, and people started paying it forward, and it got to the point that the last boot camp that we did, over 1,200 people got to go for free. There were so many donations and giveaways. It's been crazy. Previous boot camps, we had 500, 600, 500 people get to go for free. That's how many people buy it for the next person. It's been ridiculously blowing my mind how that culture turned up here. And it's not inviting you guys to start a boot camp dono spree right now, but we never asked, right? And it to me as a chef, I always say this analogy is like as a chef, right? Imagine I'm, getting in my car to leave for the day, and but at the valet, there's somebody that just got out of their car, and there's this like happy couple leaving my restaurant, and as they're leaving, there's some strangers walking, and they grab them by the shirt. Hey, I know you don't know me, but can I buy your dinner for you at this place? It's that good, right? And I hear that as a chef, it like makes me the happiest I've ever been in my life. To see people like buy it for strangers. Imagine a chef saying, hey man, you want to eat here? I know you're already going there, but let me buy your dinner. It's that good, right? It's the craziest, coolest, weirdest feeling. God damn it, you guys. So it looks like y'all are donating. So y'all are going to get the all. Jesus. All right. So thank you guys. And then I started matching people's donations 3-to-1. So Mike, brother, I love you, man. Mike donated $20. Saint donated $20. Someone at Donos boot camps. Y'all are the best. Thank you. Thank you guys. All right. So each one of those is 4 additional boot camps. That's 52. All right. I'm going to give away 52. 52 of you guys can come to the course absolutely for free. How about that? Isn't that crazy, right? I must make my money trading or something. Who knows? There must be something to that. All right. Are only calculating 0 DTE? No, we're calculating all options at all times, and are part of the equation. All right. Type in free class, and 52 of you guys can come for free. Type in. Type in free class. We're going to toss away 52 free bootcamp seats. All right, guys, type in free class. We'll do a little bit of a giveaway in just a second here. This is fantastic. Thank you guys for your donations. I really appreciated that. Looks like there's more that just came through. Hold on. Hold on. Am I missing some? I am missing one more. Hold on. $56. Because I saw that Phoenix dropped one too. 56. Thanks, buddy. Appreciate you guys. 56. I'm counting right.
up before the sunrise. Blue glow on your face again. Coffee ring on the desk. Same sweatshirt, same pen. Charts dancing in your glasses. Numbers racing around your eyes. I'm spinning circles on the carpet.
All right, guys, type in free class.
I bark at the candles, I growl at the red. I howl when it's climbing, you just scratch my head. You say sit, pickle, sit, while you chase another tray. I see the pattern clear as daylight, but you never hear the calls I make. Green bars like tennis balls, red ones feel like rain. You lean close, biting your lip, riding every wave of gain and pain. I paw the floor when it's topping, tail thumps when it's gonna run. You're talking to your monitor, I'm talking to the sun. I bark at the candles, I growl at the red. I howl when it's climbing, you just scratch my head. You say sit, pickle, sit, while you chase another tray. I see the pattern clear as daylight, but you never hear the calls I make. You mutter all your mantras, cut it quick, let it ride. I'm barking, take the profit as it rolls back like the tide. You miss a move, you blame the spread. I just nudge your knee instead. If you heard my little warning song, we both have bigger beds. I bark at the candles, I growl at the red. I howl when it's climbing, you just scratch my head. You say sit, pickle, sit, while you chase another tray. I see the pattern clear as daylight, but you never hear the calls I make. Hail a rocket scooter bright, you lead us through the trading night, with monthly maps and DD bands. You steady our unsteady hands. Ooh, the half gap shines a holy zone, where bold entries stand alone. And when the trend begins to bend, the fan is drawn, our trades ascend. All hail to you, our scooter guide. In the bull zone we abide. No red can shake, no bear can break. Our P&L shall rise. We do not chase, we do not fear, for Pickle's bark is always near.
All right, we're gonna give out.
By our dogs' noble gate,
We are going to give out
hold our trades till end of day, with maps confirmed and bands alive.
56 boot camps. All right.
Single time,
We must use ChatGPT.
we scoot the bold obedient way. All hail to you, our
Choose 56 random names from this list.
no red can shake.
And the winners are
Our P&L shall rise. Our
Young Cootie, Rome Chow, Espanol, Big Val Gaming, Andre Andrezej 5980. Jump Squadron, Zach T, Ethan Hunt, Cranston White, Scene Exclusive, Anish Kambani, My Stories, Wacho Man, Kishan Shah, Marvin, Incubasis, Always Learning, Benno Trade, Fantasy John, Bryce 5080, Nightlock Store, Lord Blood Raven, Big Dub Trader, John W, Bela Joey, Foreman FX, Not George, Jason Cruz, Ralph Turner, 2525 Maybox, Stock Fudge, Ryan Thorne, Many Tries, Ashifer, Snowy, Victor Kukin, did you won? Yes, you won. Zanuck Trades, Alexander, Sleepy Panda, FX Somesh, Ahmed Hussein, Real Mike Sprouse, Vincent King, Brahim Lagrur, Chris Z, Cameron Cook, Jay Emerson, Chetty 907, King Miklo 214, Liquid Cap, Slick Rick Bro, Atomic Funds, Business Lens, Jillian 8329, Kyle Lada, and Haha 924. You guys now can learn trading for free. No strings attached. You can sign up for the boot camp now, or you can wait till we do the live sesh, which you go over the videos together live. But you can do it starting today. Watch the videos. Watch the videos one a day if you guys want to do it. Let me load this up in here. Hold on. All right, we'll do some private giveaways in a second as well. All right. Andrew, if you're here, you don't have to keep history of the bootcamp giveaways. You can delete all that stuff, by the way, on that sheet. If you're listening, I know we're running out of room on the sheet. Don't worry about it. All right. So the way you claim this is the way you claim any of our prizes here. You're going to go to my Discord in the description of, in the description of this video has that link. You're going to go to the contest channel. And in that contest channel, you're going to find an admin named Slacks. Send him a message, or we're working him out. We're working him today, and tell him you won the free boot camp. He'll tell you how to get in. It's $20 per month. So cancel after the first month if you don't want to be charged again, but you can stay here every single month after that if you want to, and continuously do the boot camps. So we do them every about 2 months. We'll rerun the boot camp from scratch. Can you take it twice? Yeah, you can. Go for it. Am I talking about current market strategy? We can have some accommodations to it if you guys want.
Market spinning in chaotic haze. Rocket scooter blast through the maze. Volume prediction shows the way. Leave the doubt and the fray. Liquidity map paints the scene. Hidden nodes like ghosts unseen. Reverse engineer to see the light. Illuminate the darkest night. Rocket scooter has got the key. Pull back curtains, let me see where institutions hide. Doubt can't live where you reside.
That's awesome, guys. Congratulations. Our next prop giveaway ETF, type it in.
Trends we ride with heads held high. Resilience makes the weak ones fly. Future volume crystal clear. Rocket scooter leads no fear. No more guesswork, no more loss. Seeing paths the others cross. Institutions will be seen. Predict the flow like a machine. Rocket scooter, you got the key. Pull back curtains, let me see. Where institutions hide. Doubt can't live where you reside.
Staring down the charts, pre-dawn glow. Liquidity's thin, but I still go. Numbers burn like fire in my veins. Volume pivots whisper through the pain. I ain't looking for a win each time, just that I stick to the rhythm and the line. 'Cause it's not about being right today, it's how I play the game my way. I'm wrong. From the right place I fall. With a cold face but I rise. With a trade plan still tied. Every single time I step into the fight. The tape runs fast but I don't chase. Rocket scooter maps a sacred place. DD bands and hedge wall zones are the graveyards of
All right, guys, type in ETF.
Giveaway in just a second here. First giveaway, 10K ETF end of the day draw on account.
just that clean confluence line. No shame in red. If I took the shot from the low, I swore I'd never forget I'm wrong. From the right place I fall. But don't erase my edge. Lives in rules and time. Games are made from the grind and the climb. Take the train. Don't hesitate. Every loss nowhere is a step to somewhere great. I'm wrong. From the right place, stand tall. In the dark space, straight strong. Through the noise and the fear, the path gets clearer. Yeah, I'm wrong. From the right place.
Should I buy an MHP? Data's not any better than it was before, so probably not.
Rocket scooter. Rocket scooter. Thank you. Don't fight. HP. Come alive. Resilience moving. The rocket scooter will fly. Banks and giants hiding in plain sight. We read the volume. Money moves in the night. Narratives. Burning man. Melting funds by the thousands. Burning loans. Burning short. Crypto stocks. It's going nuts. We're just getting started. We don't do it for the money. We don't do it for the honeys. We don't do it for the fame. We do it 'cause we can. Rocket scooter. Rocket scooter. Rocket scooter.
Bottled up, we shake it up like a Coke and a soda pop. Pressure's rising, we've had enough, we've done the research. We're holding. We're the cavalry, and the rocket scooters leading the charge. Hold on, we're coming, hold on. We're coming, we got you, we got you. Buckle up, shake it up, shake it up, shake it up, shake it up. Rocket scooter. Rocket scooter. Rocket scooter, baby. We're coming, we're coming, we're coming. Rocket scooter, baby. We're coming, we're coming. Hold on, hold on, hold on. Rocket scooter, baby. We're coming, we're coming, we're coming. Rocket scooter, baby. We're coming, we're coming. Hold on, hold on, hold Fingers twitch, red numbers glow. Screens a battlefield, don't you know? Bottle eyes, soul dream, now drowning in the market stream. Crash and burn. The lessons we'll never learn.
All right, we'll do our giveaway in just 1 second here. I gotta talk to one of my teammates here really quick. Hold on.
Coffee cold, nerves of steel, losing touch with what is real.
All right. Very first giveaway, prop firms today, sponsored by Elite Trader Funding. We've got that. We've got, I think, Lucid this morning. And I think we're doing a, hold on, let me double check. It is MFF. Ooh, ETF and Lucid today. You guys love Lucid. I love Lucid. Well, I've never traded with them, but I love that you guys love Lucid. Great experience with them from the affiliate side. No problems, no payout denials, nothing. Great firm all around. They're one of the top ranked firms on the website. All right. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. This is the ETF 10K. Currently right now, Elite Trader Funding. They're doing a giveaway that is a 10K 50. End of the day drawdown 10K. They're currently at 80% off sale on their static, which is the best account they have there. 50% off of their direct to funded. I'll tell you, those are the good accounts they have there. Lucid's having 40% off everything. Does end April 1st, so catch up on that while you can. Lucid's a fan favorite here. They are currently the 3rd or 4th ranked firm on our prop site. Let me double check. Hold on. Lucid is currently ranked 3rd on our prop site of all the firms out there. They quickly have made their way close to the top, which is fantastic. Under default settings, 3rd rank. Lucid is a very good plan. You guys love it. And they're 40% off. You can buy up to 40% off, which is going really, really great there. And also My Funded Futures, the 2nd ranked firm on the site. Again, unbiased ranking based on the math and the offerings. My Funded Futures is having a $49 25K flex, 20% off the Rapids. That's pretty cool. 30% off for existing users on the pro side, 50% off for new users. Crazy big sale. My Funded Futures going on too. All right. Hold on. Did I spin the wheel for this? Was I talking? Have I spun the wheel? Dude, I've completely my brain is just farted. Have I spun the wheel yet for ETF? All right, let's go. All right. I'm looking at it. I'm like 326. That's already happened. Spin it, baby. What the heck? Why is it logging me out here? Paul Jitsu. Type something in chat, buddy, to claim your prize. I can't see. I can't see. That's the Lance song. Oh, it's so funny. I remember that song. Oops. Congratulations, Paul. All right. Lucid, baby. We'll try one more time. 5 minutes. Type Lucid, 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 Lucid. Type it in. Super excited to share the new website that we built with you guys. It's fun. You can actually come in here and play with it, have some fun. If you guys are in our beta test, you'll be able to play with it. But also, we'll have more information when it goes public. So people are freaking out that Top Step's not ranked so high. I think that's kind of interesting. But at the end of it, let me go through and sort of. Now again, when there's a sale, these scores will change. Obviously, scores are dynamic based on the sales you have going on there. But We were compare like Lucid and Funded Next and Tradeify and Top Step. Oh, can I add more than, oh, just 3. Okay, let's do Top Step. I'm telling you, dude, people are like, people are like, you're just ranking your favorite. This is what I hate. People, when you say something people don't like, they're going to accuse you of fraud. That's what people are saying. I'm ranking my favorite firms the best. I'm not ranking anything. I'm not handling any of the data. That's the thing. I'm not ranking anything. I wrote the model. The numbers are what the numbers are. I personally don't touch any of the data. Our employees can testify to that. All right, add that to compare. Funded Next and Top Step. Compare. All right, type in Lucid, and in just a second we'll do a little giveaway here. And again, this is just beta, so there's going to be more data shown here and more AI descriptors to tell you the actual reasoning. This is not done yet. That's why it's not as cool as it's going to be. This just, he put basic information just to show the layouts, and beta is just the layout. We're going to condense this to give you more information. You'll be able to highlight to slightly different scores. But Lucid has a higher ROI value. What is ROI value, you may ask? Well, let me tell you a little bit about the equation without telling you too much, but I'll tell you what it is, right? ROI value is the expected payout that you get against the total all-in to get payout. An example being, if you pass one account for every 10 that you fail, then it costs you 11 evals. Or 10, I guess you say 1. If you buy 10, pass 1, let's just say 10. All right, so you fail 9 and pass 1, total of 10. So you have to buy 10 and you have to activate one of them. So there's a cost, right? There's a total cost. And all the data costs and all the side costs and platform costs, whatever, is all added up to the total all on cost, right? So however much you're going to fail, and you can tell the site what you're going to fail, there's an all-in cost. That's easy to see. And then for payout, when you're ranking every firm, payout, 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 nobody makes it to the 5th or the 4th or whatever payout. It's not the maximum payout you can get. That's where people are like, can I say the R word? Like, people are so dumb, because it's like, you're not comparing how much leg room you get in first class when you're sitting in coach. It doesn't matter what the live program does. If you were to account for the max payouts from any firm that has live, you can make infinity dollars, and therefore your score is infinity. Like, you can't compare a firm like that. But TopStep has a better live program. Okay, so you can make infinity ROI. Do you? No, you don't. Nobody realistically does. It's a realistic risk model and based on what you're expected to make. The best possible ROI you can get, for instance, at your first payout within the first month, baselines everybody to the same comparison. Month 1 is compared, month 2 is compared, month 3 is compared, and so on. So the idea is the best payout. Take profit, you can make $10,000 in your first payout. A portion of that's at 80%, the other portion of that's at 50% profit split. Do we assume everybody's gonna make it to the end and then take everything out? No, we don't. For the purpose of normalizing everything, we take it to the statistical most likely first payout, first of all, has the most weight. And the likelihood of achieving second payout and third payout and fourth payout is a decay model that's unlikely. It doesn't really factor in as much because it doesn't count. Your ROI based on that first payout is the biggest weight of the account. Doesn't matter if my funded, we don't account for you can make a $100,000 payout. Not the max you can get. It's the likely payout you're gonna take. The quickest path to payout. The trick of the model is the quickest path to payout. That's how you normalize everybody. You guys are a failed trader. You cannot base a model off of the best case scenario. Does this make sense? Am I making any kind of mathematical sense? not you guys, but as a whole population, are failed traders in regards to the risk model. You lose more than you win with props. You cannot model it based on the best case scenario. That would be absurd. You have to base it on the most likely scenario of the best possible return, the quickest you can make it for the dollar you spend. That's the only way to model. An example, if we were just to model the first payout, that's the best way to do it. First payout, like the weight, first payout, second payout, third payout, fourth payout, fifth payout are going to have declining weights towards the overall model because the likelihood of you achieving this applies to so few people. What is the best airline to fly on? Well, I don't like Spirit because Delta has the best first class leg room and I get a soda. You don't buy first class tickets. It doesn't apply to you. There's a bell curve of application that mathematically competent people will understand that we're applying a normalized scenario that applies to the most people, the biggest batch of the set of data. I don't care if somebody has a bigger live program, they give 6 payouts instead of 5. You don't ever get there. It doesn't make them rank better. It's realistic ranking based on what you will applicably make with your own trading. What's likely for you. You program your own stats in. That's what makes it fantastic. People don't understand this is not just a plug in the max payout and this firm is better because they have a bigger payout. In that case, every firm has infinity payout with the live program. You can make infinity dollars on day one in a live account, can't you? So therefore, the fact that they're not all 10s means that we don't do that. Is this making sense to you guys? Hopefully that makes a little bit of sense. But people are like, well, maybe my fund of futures is just a higher score because what, $100,000 payout, nobody gets that. I'm like, we agree. We don't factor that in. The score of my fund of futures on pro isn't based on you taking $100,000 out. We get this, right? We're smart enough to know this. It's based on the realistic quickest path to payout, including a lower. Why is it Spanish? I have no idea, dude. Bot tricks flips between English and Spanish randomly, and I don't know why. I don't use VPN or anything. I'm not really sure. There's no like slash, you know, SP or something that means I'm on the Spanish version. It just switches on its own. I don't know. I haven't been able to find settings either, so they got something going on over there. All right, cool. Listen. Did I watch Project Hail Mary? No, I haven't seen it yet. All right, one more, guys. One more in a second. We got to get these out of the way. My fund of futures. Type in MFF. But as far as the risk model goes, you guys understand, right?
Matt's got plans probably bigger than you. Scooters ready, destiny's call. The path ahead where fortune sprawl. His dog beside, loyal as a tide. They're off to break the market stride. Entering the market's roar. Matt's poised for his first big score. We'll take the rocket scooter ride. Through the ups and downs we glide. Pickles in the passenger seat. My dog barking at the tide. My girl, she enters every day. Breakfast in hand to brighten my way. On this rocket scooter ride. We're alive. Trading screens. Eyes keen and bright. Matt's ready for the morning fight. Big swings come to crash or rebound. Searching for gains that know no bound. Rebound focus, sharp and sights. Matt's determined, snake ignites. We'll take the rocket scooter ride. Through the ups and downs we glide. Pickles in the passenger seat. My dog barking at the tide. My girl, she enters still ride. We'll take the rocket scooter ride. Through the ups and downs we glide. Pickles in the passenger seat. My dog barking at the tide. My girl, she enters every day. Breakfast in hand to brighten my way. On this rocket scooter ride. We're alive. Scooter speeds and dog barks play. Fading out at end of day. Mad dreams, they will fly, fly, fly away. Bulls on bottom, arriba let go. Liquidity pocket, fuego puro flow. Rocket scooter, we're trading bow. Half got by, vamos por el oro. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Personto, cuidado, mi amor. Monthly map cae del corazón. Hedge your pressure type, but we're alive. Every single time, siempre a sobrevivir. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Resilient souls, fuerza, corazón. Didi pensa en la pasión. Risk interval we shine every single time. Ole. Ole, ole, ole. Ole, ole, ole. Ole, ole, ole. Ole, ole, ole. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Liquidity pocket party. Ole, ole, ole. Liquidity pocket party. Vamos, vamos, hey. Ole, ole, ole. Ole, ole. Ole, ole, ole. Liquidity pocket party. Rocket scooter. Ole, ole, ole.
You're driving yourself mad with all your technical analysis. Another trend line, another level only brings you more paralysis. Clean up your charts, volume pivots is all you need. Rocket scooter is your answer, just come to the daily stream. It's okay to admit if you're on the wrong track. Make the U-turn now and never turn back. It's okay to admit if your charts look like shit. We've all been there, we know. Delete is what you
Bathroom break in case you win. All right, Marlon. If you win, bro, I'll hold it for you. Cinder box. Tender box. Bam. Congrats, man. CQG, AMP, if you're using our tools, AMP is probably the best firms for CQG connection. All right, winners, you know the drill. Go to my Discord, link in the description below the video. Go to the contest channel, talk to an admin named Slack, send him a screenshot of your YouTube ID and it'll hook you up with your free stuff. Bootcamp, I'd recommend that you guys just jump in now and watch the videos. We'll probably do it around April, as soon as the prop scoring site is out, which is taking a lot of time. So it's gonna be April sometime. We'll do bootcamp live, but you don't need the live. The live just goes over the videos in a Zoom call together. You can ask me questions, but feel free to ask me questions in this chat. Pace yourself, boot campers, for one video a day and do not miss a day. Every day, watch one video and absorb it back to back to back to back. It's designed for that. Total immersion. It will change how you think about markets, I promise, if you don't miss a day. What happens in April? Bootcamp. So bootcamp, we meet at market close in a Zoom call. We will play the video together and I'll pause it and talk about it, answer questions, use real world examples that are applicable in that style of market. For example, we're in this like weird choppy flat market now. I will pause a certain lesson to talk about how it applies to this market, which can be useful. And plus I'm there to answer questions as well. But it's basically just, it's like I'm a student with you guys and I'm there in the class to chat with y'all. How to access the videos? You're gonna go to Rocket Place website. You're gonna go to my, here, let me give you a link. Hold on. Just buy it here. And supporting our community gives you access to the Discord and everything. You're gonna have a lot of fun doing it. Here's the link. And what a weird trading day today. What do y'all think? We just end up just like, I feel like this is a day that's just gonna float and float and float and float and then just fall lower and stay lower. You know what I'm saying? I hate days like this. Or just, it doesn't sell off or crash, but it basically just does this. And then it just like maybe jumps down like that, just chills. And then does this, and then it maybe just like jumps down in the close. I feel like it's not gonna, we're not gonna get swings anymore. The only reason I'm sitting on the sideline is I'm waiting for like another, you know, news type thing to sell off or whatever. But I'm okay. I mean, 12,800 bucks, not a big deal. The origin of the name Rocket Scooter? I already told that story this week, didn't I? It came from me trying to design the original app with the data feed contract we had provided a certain amount of data per time. Like we had a certain amount of data we were promised. We were pulling inside of that allowed specification, but we were still crashing their server. And it turns out they had an issue. We called it cold caching. It's kind of the term we came up to describe it. Was they were having to fetch data themselves for options that people didn't look at. And if it wasn't cached, they had this like sort of like process where they would retrieve the data and wait, and then ask for the next one and wait, ask for the next one and wait. And so when we were like, we need all these options data now, this moment in time to calculate resilience, monthly hedge pressure to do resilience, we were looking at every single option, like the 500th company in the S&P's option that expires 3 months from now, out of the money. You know, nobody, there's no volume on that option. Not a single person will trade it today. But we're like, we need the data now. So those one-off requests, they would fetch that. It was like they would pre-cache the popular stuff, right? So that people would call it was available. But this data, they actually went out and retrieved it, rolled it up, parsed it, and gave it to us. And then so they'd have to do that sequentially, one at a time. And so the times would sort of, a backlog would start to grow like this, where it'd start to take like infinity time for them to get through all the requests. So that service wasn't available via WebSocket or any kind of API. It was a REST call. And so their process was quick enough to do it all. They said it was, however, it wasn't. And if we found out that we found a hole in their system. Anyways, My team was like, why didn't you just, buy the API? It was 3 times more per month. WebSocket real time, promise. And I was like, because the REST call version was a third of the price, and also had specifications that said that we can meet it. I'm an engineer. I'm going to save price and build in spec. Save money. Why would I buy the more expensive spaceship when I can just buy their scooter and put my own rocket engine on it? And that was a conversation I had with the partners, and they understood. They were like, you're right. We spent 2 years battling the data company, and they ended up being wrong, and they ended up giving us those 2 years for free so that we wouldn't sue them, and it was great. We all came up with an agreement. They were in breach of contract, so they basically let us suffer those 2 years for free. They make us pay, which is good. Then they updated their infrastructure because we proved a big hole in their system, and then they thanked us for finding it. Just like TPT thanked me for finding a hole in their system. I'm really good at this, by the way. Finding holes in systems. I'm a programmer, I'm a hacker, I do all the good stuff. I like doing that. Anyways, Amjad, as awesome as he is, built this huge case, presented it to them. And so when we were naming the company, we were kind of coming up with names for stuff. I swear I came up with like, and this is before AI was a thing, right? AI wasn't even a real big thing back then. But I came up with like, every goofy name generator idea I could think of. It was the dumbest sounding stuff, like hedge metrics, stuff that sounds stupid, like just sounds dumb. Hedge gamma, like stuff I would just cringe over hearing again. And then when we got to the end of like exhausting all the serious Wall Streety sounding names, hedge me slowly, baby. There you go. Then I started throwing out joking names, names that sounded funny. Like Robin Hood was a funny name to me, but it made a lot of sense. You're Robin, the markets or whatever. Weeble. I was like, we come up with something cool and different. Trend Spider. These are cool sounding names that are different and fun and kind of funny. They have a techie kind of sound, but they also don't sound like when you think of Spot Gamma, like, but they put that name inside of a company name generator that just chose that out of a hat. Like, it doesn't sound, it just sounds too, cliche, right? And so we were like, let's think of something that's different, that's memorable. And I've started out goofy names. And I was like, how about Rocket Scooter? People are like, oh my God, I remember when you said that. That's what everyone said. I remember when you said that. And I was like, yeah, because we would always say Rocket Scooter was the way we always say it to each other at that point, after that happened. Rocket Scooter was Matt's design to engineer something himself if it was going to save us time and money. I'd rather build it myself, right? That's what engineers do. Rocket Scooter is a nod to being an engineer. And so when I named it, everyone laughed and thought it was hilarious. And like, no, that's so stupid. And then as time went by, and we started narrowing down the names we didn't want to have, every time we said it, people would roll their eyes and laugh and chuckle. And then we laughed. And then we're like, actually, it's like the perfect name. Because it embodies what we do as a team. You can think of like the logo right here. It's a scooter with a rocket engine on it that's tied onto it with a rope. That says all. It's a huge metaphor for what we do. It's not welded on there. It's tied on there with the rope, which means we kind of built it in our garage, which is what it implies. We took something that's existing, a child's toy, charts and technical analysis, what babies use, and then we amped it up, right? So that now can fly out in space, right? So it says so many things all at once, and it made perfect sense. Everyone else uses a scooter, we use the rocket, right? Am I a programmer as well? I am, yeah, I'm a programmer as well. It was always a hobby when I was a kid. I never went to school for it, but I learned coding. I started learning coding at age 12. I was teaching myself. I first started learning on Turbo Pascal in Basic, or like the first 2 languages I started learning. And then I learned C++, Fortran, C#. In school, we learned like MATLAB, Fortran. Did I say Fortran already? Then I learned a little JavaScript when I got out of school. I'm not by any means like a full stack programming expert. On a scale of like 1 to 10, I'm probably like a 3 or 4 out of 10. I'm enough. It's enough to code, to hack, to code, do all that kind of stuff. But it's definitely, I'm not building like web apps myself. Do I still code? I do, yeah. Like I do most of the coding for the platform. All the indicators and stuff, I wrote the code myself in Python. Yeah. And then we converted that Python to RocketScript, which is actually we created our own coding language called RocketScript. So my Python code was converted to RocketScript, which is server code that runs all this stuff on the back end, and then we WebSocket the data into the front end. So Rocket Scooter is powered by RocketScript, which is a JavaScript based coding language themed for our trading platform. Yeah. So I did all the coding myself. For the prop scoring website, I did all the coding myself as well. For all the back end stuff, all the math and everything. When I was a kid, I wrote my first thing I ever made that was like really fun was I created a version of Pac-Man in Turbo Pascal. It was a very, very, very basic version of a Pac-Man like game. That was one of the first things I ever did. That's memorable. It was very, 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 very rudimentary. That to me was a project so I can learn how to code and code graphics and stuff. So I was like, I want to just make something, practice coding, get good at it, and let's make a game. You can move, it have different that, it keeps score, had ghosts. It didn't look good, of course, but at least it kind of worked. I was 12. And this was in the era of like Apple II computers. You know what I mean? So at that point, we finally got IBM clone computers in middle school. Before that, we had Macintoshes in middle school. And then once I got into high school, they had like maybe HPs or something. You know, finally had PCs. I'm an 80s kid, so when I first started learning coding, it was on an Apple II. I was in computer club in middle school, and we started learning on BASIC. Actually, I learned BASIC before Turbo Pascal. Now I think about it. I'm skipping a whole year. Yeah, my computer club in middle school, we started learning on BASIC on an Apple II. And then in 7th grade, in junior high, is when we had accessibilities to Turbo Pascal and stuff. I'm 50 years old. I'm 40s. Don't add extra years. Yeah. You can't use interactive brokers on our platform. Am I shorting from DD? No, I don't short below DD van. It's one of the things one of the rules I teach is I don't short below here. Is this Thursday? I've made 169,000 in 1 week. That's crazy. On this 100K account. That's crazy. In this environment, it's not really, I didn't really add it up in my head, but I've made $170,000 in the last week. It's not too shabby. On a 200 account, that's extremely aggressive. That's very aggressive. Well, I did have like a 65K day one day though. I got really just back to back lucky. Right, so MHP is breaking. Does everybody see? Remember I told you 100% chance of volume spike? Isn't that crazy how it's just so predictable, right? So you guys understand that I wasn't like blowing steam up your ass, especially new people here. It's proven in front of your face. I know the pivots that matter, right? And whether I'm right or wrong, it doesn't matter, but I'm right or wrong from the right place, which my entry efficiency gets so much better as I'm trading from the right spot. I know to be right. So it's resistance. And as you see, when you break through MHP, the volume gets even crazier. Even before your very eyes, the universe decided to give you guys an example of an irrational market, which I don't even trade. You below MHP, watch how much it flips out. There's no longing here. I'm gonna sit back. Here's the open pivot. Here's the DD band pivot, volume and volume. Seriously though, like no trolls, 'cause you guys troll me all the time. How many people was your first day in chat and this is your first exposure to what it is we built? It's volume prediction. And 2 words, people say, what do these guys do? Volume prediction. Is that P&L for the week? Yeah, let me show. Give me a second. Let me load up the old trading report. Custom range. March the. Oops, custom range. Oops. My platform is literally freezing when I'm trying to do it. Hold on. Sometimes it doesn't generate the report when you go click the report. Have you ever had that happen with Tradeovate? When you go to click the report, it just sits there blank. Ain't working. Let me try again. Oh, here it goes. Hold on.
Hello, man. It's me again.
All right, hold on, let me get a picture of it. So this was the day that I made the withdrawal. Hold on. Let me get this here. Hold on. Let me get the... So this is the 19th. It's Thursday till Thursday. When you include the day before, it says 108, but you have to add the drawdown, right? So 108 is the overall P&L, but by midnight of that day, it was minus 31,000 in drawdown. So minus 31 plus 108 is 140. Okay, so 140. Oh, so I guess if you include, well, I guess there's some carryover. Okay, so 20K is missing because Wednesday I took out 2 withdrawals. Like Wednesday I took out 1 in the day, 1 in the afternoon, and I'm trading throughout the whole time. So maybe I'm off by 20K. Maybe I ended up at 220. Either case, minus 31 to 108 is a path of 140K from 141K half in just the week. Plus whatever, again, this is at midnight, I guess is when they start that. It's missing the 20K from the Asia sesh until midnight from the previous night before. Or maybe that's the way that's working. So Wednesday night, there's 20 more K P&L not shown there. I was trading both nights anyways. So I don't know when they start their measure from, which is probably midnight. But there's 140K of travel plus probably the 20K overlap. I was in the middle of a trade on Wednesday and I was like, I'm going to take out the 200. But then I made some money and then I was like, well, maybe, you know, and lost some money. It was Fed day, right? So it was kind of like hard to estimate exactly on point while in a trade. In the end of the day, changed the balance. So at the end of the night, I put in another request to take out. And then I immediately started trading when market opens. So Wednesday night I was trading. So since that starts on Thursday, it's not the Wednesday night's not count on there. There's no way for me to make a P&L from Wednesday futures open until now. It looks like it's just considering the trades for that segment. You guys get what I'm saying, right? Is this the most difficult PA that I've traded? Yeah, this has been pretty hard. Do I trade props or personal? I traded both for a while. I just trade personal now. I don't really need to trade props since I make a lot of money trading personal. So I really just traded props to kind of like be ingrained in the community, to get to know a little bit about, you know, how props work so I can teach props and give it a shot. In the last year of trading, I pulled out a little bit over $1 million from props in 1 year. What did I pay in? Probably close to 200,000, give or take. So I probably roughly 5x'd. And I traded my funded futures, ETF, Tradeify, funded next, TPT. And not all at once either, like staggered. I went live with ETF. I went live with my funded futures. I went live with Tradeify. And then last week, I just decided that I wanted to focus on this $1 million challenge. I'm not gonna lie to you guys. I went to the doctor because I am feeling like my mental health is starting to decline a little bit. I'm overworked, too much on my plate, and basically my doctor was like, you need to clear up your head a little bit. You've got too much on your plate. This year I'm doing way too much. Prop scoring site, putting Rocket Scooter on multiple trading platforms now, partnerships with Ninja, Go Charting, MyFunded TV, streaming all day, bringing on new streamers, working on the overnight dynamic hedge pressure model, opening a fitness studio, opening a tea Vietnamese coffee shop, opening an escape room, all concurrently right now, and talking to our friend about commercial real estate, building some properties, or building getting some properties and building on them for commercial. So I'm pretty busy, right? Do I need some Valium? Oh, dude, I got Valium and Xanax. Xannies are good, but they make you lose your memory. That's what's bad about those guys. Stress is no good. So the doctor is like, you need to cut some things out. So I completely cut out a lot of stuff. Like, what's some low-lying fruit? Oh, you're also managing these prop accounts. Well, like, what all do you do? And I'm like, well, prop accounts, and just like, what is that? What's trading? But you're already trading and you're trading something else. Yeah. Why are you trading two things? It's kind of to grow the channel. People watch you when you trade props. That's kind of where everybody is right now. They're like, are you making a lot of money from it? I'm like, a little bit. Is it worth, you know, the hours you're committed to it? Not really. You make a whole lot more with your regular trading? Yes, I do. Well, that's low-lying fruit. If you want to trim up something that's 2 or 3 things less on your plate to worry about and finish up everything, because it's a lot. I manually trade. I don't copy trade, so it's hard. Every account I manage, you know, one at a time, so a little difficult. So I decided just to pull the plug after I got My goal was I was going to go live with every prop firm and pull the plug anyways, because that was just to make a statement that I was good at trading. And like I said, once I went live, I never touched the firms again. You know, I went live with ETF. You never hear me mention them again, trading them. I went live with my fund and futures. Never hear me mention trading them again. Went live with Tradify. Never mentioned me trading them again. So I was like, let me just knock them off the list to go live and do that as a feat. But kind of like in the middle of the journey, I'm like, that's one less thing I can worry about. Goji berries. How about some Invigoron berries? That might help. I gotta go, guys. It's my fun at TV time. Thank you for tuning in. As always, I love y'all. I had a great time. Great giveaways. Great morning. Great chats. I love you guys. I got to explain Rocket Scooter to some of y'all. Gave away 50-something boot camps. Congratulations to all the winners. Start watching the videos now. Jump into it. Have some fun with it. Somebody said cut the drugs. Yep. I'm not drinking that much. No, not doing much drugs. Trying to do like as clean as possible and de-stress. I found out that I'm addicted to stress. That's not good. I love it. I love my life. I love cramming as much shit in my life as I can. Fortunately, when you get old, your body physically can't handle what your mind wants to do sometimes. This trader mental health is always important. I'm fatigued. I'm tired. At the end of the day, I'm just on the couch. I don't want to move. You know, it's like, okay, I got to change something. Everybody click that link in chat. It was kind of funny because when I logged into TPT yesterday, I had $40,000 of P&L sitting there that I forgot to withdraw. So withdraw 30 of it, left the buffer in there. I might actually make one more TPT trade just to YOLO that buffer. I didn't do it today, but YOLO that buffer just to see what I can get out of it and then call it quits for good. The complete boot camp is free for a month. Yeah, you can watch all the videos within the month, and once you're done with the month, you can get it over with. And then cancel if you don't want to stick around. But if you want to stay on the Discord, you can stay on the Discord and keep watching the new bootcamp videos or join the next bootcamp. It's $20. Our Discord and everything is 20 bucks. All right, guys. Join me on My Funded TV. I love that y'all come over there and support that. Big fan over there of that show. So y'all come over there doing all kind of giveaways and stuff. We'll see y'all in a minute. After this, come back here 12:30 Central, 1:30 Eastern. Neon will be streaming. I'm here in chat. All right, guys. See y'all later. Leave a like before you leave. And don't forget to sub the channel. Love y'all. I am out.